Okay, so here comes the next chapter, which is specialized areas. 800 series we have. Question bank, there is nothing much to discuss. You can, wherever SA720 you find it in the answer, just read it. So if at all required, we will do it. I have looked at the questions. There is nothing which require my involvement to make you understand. So I'll directly go with the specialized areas. So let us try to understand the chapter specialized areas. So now let me set out very easy chapter, guys. Very easy chapter. Hardly a few hours we can complete the chapter. And the thing here is these standards, whatever we are going to discuss in this chapter, they have recently undergone some changes. They have recently some amendments which are made to the standards. So since it is a most relevant topic, so remaining alert is very important here. Earlier, these standards are not important. Once in a while, they used to ask it. Very rarely, they used to ask. But since this areas contains a few amendments in the reporting requirements, especially in these 3 standards, that's why its importance has gone up now. Okay, right. So let us try to understand what are the specialized areas, what exactly we are going to learn in the specialized areas. So from the last 2 days, we are having very boring discussion, no? Now, for a few days, for today, tomorrow, we will have a conceptual discussion. Will not be that boring. So it will be engaging content only we will have, right? Once again, I will not tell you the chapter. I will tell you I will not come. So which chapters will be boring again? I'm supposed to tell you, but I will not say it, right? So specialized areas we are going to discuss. Sir, what are these specialized areas? Sometimes we chartered accountants in practice, we mainly do audits. And whatever audits we do, like whatever standards we have covered, till now we have covered 200 series of the standards, 300 series, 500 series, 700 series, which is talking about audit procedures and engagement letters, our reporting requirements, and how you can make use of the work of others. So like that, so much of content we have discussed from the standards. Now all the standards are talking from the perspective of audit of general purpose financial statements. All the standards are talking from the perspective of general purpose financial statements. Basically, those financial statements which are prepared by the entity for various needs of various users' needs. Like financial statements prepared by the listed company, financial statements, statutory audit of a normal company. So whatever standards we have discussed now, those are all the standards which are talking from the audit perspective of a general purpose financial statements. Like what audit procedures we have seen, engagement letter, audit reporting, every standard whatever we have discussed, that is purely from the perspective of audit of general purpose financial statements. Those are financial statements which are expected to fulfill the information needs of all the users. But sometimes we chartered accountants, we might also be requested by the clients to do audits of special purpose financial statements or that financial information which is specific only for certain users. Sometimes we as a chartered accountant, we might be requested by the clients to do some audit engagements where we are verifying some special kind of financial statements prepared for specific users, not for everybody's use. Some users will be there, they will have their own requirements. According to that requirements, they get the financial statements done and they will approach you as an auditor. Sir, you please verify these financial statements which are not for everybody, which is for specific users. Just a minute, I have to keep my laptop on charge. Yeah, please settle down. So as I was saying, till now, whatever standards we have discussed, those are all talking from the perspective of general purpose financial statements. But we chartered accountants, so we might be sometimes called to verify some information which is not prepared for everybody, which will be prepared for the specific users. And that special cases can be of 3 categories. That special cases where we are required to verify information for specific users that could come in 3 circumstances. Number 1, as an auditor, sometimes we might be called upon by the client to do the audit engagement of financial statements which are prepared as per special purpose framework. The management might prepare the financial statements as per special purpose framework to fill the needs of specific user. So in case if you are called upon by the client to conduct audit of the financial statements prepared as per special purpose framework, not as per general purpose framework. There is some special purpose framework. According to that framework, financial statements are prepared, and the client is calling you to do the audit of that financial statements as per special purpose framework. Then how to do the audit of that? How to conduct that audit engagement? That guidance has been given under SA800. That guidance is given under SA800. Case number 2. Sometimes as a chartered accountant, you might be called upon by the client to do audit of not complete financial statements. They might ask you to conduct audit of a single financial statement or a particular element of a financial statement. Sometimes some clients might approach you asking you to do the audit engagement. But that audit engagement is not for audit of complete financial statements. That audit engagement is only to do the audit of a single financial statement or a particular element of a financial statement, element or item of a financial statement. Sir, what do you mean by this? Sometimes some client might approach you and say, sir, please do audit of only balance sheet. Sometimes some client might come and say, please do audit of only P&L statement. Some client might come and say, please do audit of only cash flow statement. That is a single financial statement audit. Or sometimes some clients might come up with a requirement, sir, we want you to conduct audit of only our trade receivables. We want you to conduct the audit of only revenue. We want you to conduct audit of only fixed assets. So this we call it as audit of a specific element or item of a financial statement. So some clients might be approaching us to do audit of a single financial statement or even specific element of a financial statements. In that cases, how to do the engagements, that guidance has been provided by SA805. That guidance has been provided by what? SA805. Then we have third category. Sometimes the client might approach you and ask you to do something called audit of summary financial statements. Client might come to you and ask you to do audit of something called summary financial statements. Nothing but you might have heard somewhere. Now this concept is not there. There used to be something called abbreviated financial statements, where there will be complete set of financial statements will be there, balance sheet, P&L, breakup, notes, everything will be there. But in the old days, what used to happen is circulation used to happen physically by way of post and all. So when the circulation used to happen physically, annual reports used to be very bulky. When you add this MDA, notes to accounts, these all will be bulky. So it becomes very difficult to circulate the annual report. Even it used to become very difficult to circulate entire financial statements also, because notes to accounts itself will run for some 30-40 pages. So if you take the company like Reliance, circulating that full copy of the financial statements used to be very difficult, very costly affair also. Lakhs of shareholders are there. For all of them, you have to circulate. So in previous days, what they used to do is, there used to be one complete set of financial statements. From that, they will extract a summary. That means breakup and all will not be there. Just balance sheet, P&L, cash flow statement, some important 1 or 2 pages of notes. That's it. So that summarized financial statements they used to prepare, and this summarized financial statements will be circulated to the shareholder. But if at all shareholders want to view that complete financial statements, they will be made available for them. So whether this summary financial statements which is getting circulated, whether that is giving true and fair. Why? Because sometimes you can do manipulation in that summaries also. Complete financial statements will give a true and fair picture, but when they're summarizing and circulating it, in that they can do a manipulation. There could be manipulations happening there as well. So that's why what they have told us, that summary financial statements are also required to be audited. In those cases, the clients will approach you asking you to do audit of summary financial statements. Then how you are supposed to do that audit of summary financial statements, that is explained under SA810. That is explained under SA810. So these 3 are the specialized areas, and these are the 3 standards. If we have discussed that 3 standards are specialized areas, where areas concept will be over. Okay, so what is the scope of this chapter? Number 1, SA800 talking about how to conduct audit of the financial statements prepared as per special purpose framework. Number 2, which is talking about how to conduct audit of a single financial statements or a specific element or item of the financial statements. Then SA810 talking about how to conduct audit of summary financial statements. If we are done with that 3, chapter will come to an end. Very easy standard. I am telling you, nothing new will be there. Only a few reporting requirements here and there will change. Since we are very solid in our foundational concepts in the standards on audit, this chapters we can complete like anything. Just only reporting part, will be difficult. Only reporting thing, not difficult also. Reporting part, we have to learn it in a new. Reporting requirements will change. Apart from that, everything will be same. And we have spent a lot of time. You will realize now what is the purpose of spending that much amount of time on 700, 200, all that series of standards. Okay, right. So first we will start with SA800. How to conduct audit of financial statements prepared as per special purpose framework, or even you can say special purpose financial statements. Guys, do we know already what is the meaning of special purpose framework? Are we already aware of it? Yes. So what do you mean by special purpose framework? That framework which fulfills financial information needs of specific users of financial statements. So we need to check, we need to express our opinion whether the financial statements are, but if you are preparing the financial statements as per the requirements of some framework, but that financial statements will not fulfill the needs of everybody. That financial statements will fulfill the needs of only specific users of financial statements. That framework we are going to call it as special purpose framework. Now let us try to understand a few circumstances why this might be needed. A few examples where special purpose framework might be needed. Number one, in most of the cases, why we need the special purpose framework is when we go for loans, when we go for funding. So especially when you go for funding and all, the banks might ask you to prepare the financial statements not on accrual basis. They might ask you to prepare the financial statements on cash basis, or they will make some changes to accrual only, which they generally call it as modified accrual basis. So either they will ask you to follow completely on cash basis and prepare the financial statements, or what they will do is they will maintain accrual basis, but some items they will say these items you recognize only on cash basis. So that we call it as modified accrual basis. So that could be one case where banks or financial statements might ask you to prepare the financial statements on cash basis, because your actual loan repaying capability will not be determined by your book profits. Your actual loan repaying capability will be determined only by your cash profits. So that's why this could be the case where someone is asking you to prepare the financial statements completely on cash basis. Or there could be some other cases where you might be required to prepare financial statements on special purpose framework is, in some cases, law and regulations will tell you. In some cases, law and regulation, for some specific purposes, they might ask you to prepare the financial statements as per certain law and as per certain rules. If I have to give you one example, you take RERA. Builders are there. So for builders, this RERA Act will become applicable, no? So now RERA Act might say the builders to prepare the financial statements by classifying the cost and expenses per project. Not the total expenses and all. They might ask you to prepare the project wise segregation of expenses. Like they might be doing some 3-4 projects, but they are required to segregate the expenses and show it in the financial statements as per the project wise. For each project, what is the expense? For each project, what is the revenue that they might have to say. So this could be one case where you might be required to prepare the financial statements only to fulfill the requirements of that regulatory authority. In our example, RERA. For RERA authority, they want to make sure that how much money you have collected for the sale of flats, what is the progress you have done when you are going to give the delivery. They want to know. RERA is a regulating authority for real estate. So to know that, RERA is asking you to prepare the financial statements as per project base. So that could be one example where here also financial statements are getting prepared only to fulfill the requirements of that regulatory authority. This also could be one example. Or one more case, one more example where the financial statements are special purpose financial statements is when you are required to get some grants, especially for NGOs. So NGOs need to get funds. NGOs, sometimes the government will give them grants, or some agencies will give them grants for fulfilling their NGO objectives. Say for example, one environmental protection NGO is there, which is working on greenery, which is working on increasing that greenery on the planet. So now that NGO needs funding. One agency came forward and told, okay, we will give you funding. But to give that funding, we want to know your operations, how much you have spent it on each project, what you have done. We want you to give the financial statements, then we will give you funding. But that financial statements, you don't prepare it as per the generally accepted accounting principles. We will give you some guidelines, follow that guidelines and prepare the financial statements, then we will give you the funding. Grant. So in these cases also, you might be required to prepare financial statements to fulfill the information needs of only specific users. So these are the examples of the circumstances where a person might be, where an entity might be required to prepare financial statements only to fulfill the information needs of specific users. Clear everyone? So these are the examples. Now let us talk about audit related matters. How to do that audit. How to do that audit. Guys, everything I will try to infuse it in your brain, the standard, the technical terminology, all I will try to infuse it. Please follow the discussion. Okay. So whenever a client has approached you asking you to do the engagement for special purpose framework, financial statements prepared as per special purpose framework, first you have to decide whether you should accept that engagement or not. First you have to decide whether you should accept that engagement or not. Now what considerations you have to keep in mind before accepting the engagement? So first they say that the main consideration which you have to keep in mind, listen carefully, don't write. I will give you time to copy if at all required. I will not write anything that requires recording and all. So I will explain the concept only. I will give you structure for the concept. So if the client has come to you, asked you to do the audit of financial statements that to prepared as per special purpose framework, before accepting the engagement, you need to keep one important consideration in mind. What is that important consideration in mind is whatever framework that is getting used, whatever that special purpose framework that is getting used in the preparation of the financial statements, whether that framework is acceptable or not. Whatever financial reporting framework, whatever that special purpose framework which the management is using, whether that framework is acceptable or not. And how the auditor should take that decision, whether that framework is acceptable or not, how the auditor should take that decision is depending on what are the requirements of intended users. So there will be some intended users, no? Intended users means who? For whoever's purpose this financial statements you are preparing, whoever will base their decision on the basis of that special purpose financial statements, that people will call them as intended users. So depending upon the information requirements of that intended users, first we have to determine whether applicable financial reporting framework or whether that financial reporting standards, whatever the management has followed in the in preparing that special purpose framework, whether it is acceptable or not, we have to determine. So tell me, what is the number one consideration we need to consider before accepting the engagement? Whether financial reporting framework is acceptable, and the auditor should take this decision keeping in mind what are the requirements of the intended users. So the conclusion here is, if because of following that framework, if the information requirements of that intended users is getting met, then that framework is acceptable. If not, that is not acceptable. Right. And here they say that financial reporting framework or that financial reporting standards might come from three places. That financial reporting framework according to which you are preparing the financial statements, that might come from three places. Might be that special purpose framework could have been given by some organization. Some standard setting organization has given that applicable financial reporting framework. Say for example, NGO is getting a funding. So in order to get the NGO funding, agency told you have to prepare the financial statements. And I asked the NGO asked how we have to prepare the financial statements. Now that agency told you prepare the financial statements as per some NGO accounting standards, which is given by one global organization. There is one global organization is there across the world. That global organization is having some NGO guidelines for the preparation of financial statements. So this agency told you prepare the financial statements as given by that organization, which is a global organization, reputed organization. They also have many members registered with them. They also take the assistance of the experts and all like us, and they have drafted that NGO standards. So you tell me, if the standards, if the financial reporting framework is given by that organization, which is global, which is transparent, which is taking the assistance of experts and all, in that cases generally we presume it as acceptable or not. If some organization, if some good organization has given the standard, will we presume it is acceptable or will you doubt it? We will presume it as acceptable. Generally we will consider it as acceptable. Sometimes applicable financial reporting framework which is getting used in the preparation of that special purpose financial statements might be given by some law and regulation or law or regulation. Like RERA example I have told. In the RERA Act itself, they have told how to prepare the financial statements. That means financial reporting framework itself is there in RERA. Then also will you deem it as acceptable or will you question it? Then also we will deem it as acceptable. And the last case, which is sometimes applicable financial reporting framework which is getting followed in the preparation of that special purpose financial statements might have been given under a contract. Might have been given under a contract. Like for example, one startup entity is there. This startup entity made a pitch before venture capital. This venture capital firm told, okay, we will invest in your company. We will buy the stake in your company. But if we want to buy the stake in your company, you prepare us some financial statements and give it. Depending on that, we will determine how much stake you will get for how much percentage. But that venture capital has told in that contract only. In that contract only, they have told how to prepare that financial statements also. How to prepare that financial statements, they have told in the same contract whatever they have agreed. So now you have to follow the terms and conditions given in the contract for the purpose of preparation of special purpose financial statements. Now you tell me what is the source for that financial reporting framework in the given case? That specified contract. So in case if the financial reporting framework is given by the contract, we need to check whatever attributes generally we expect from a normal applicable financial reporting framework, whether all that attributes are also there in the contract. Or if I put it in very simple language, whatever characteristics which I generally expect in a normal applicable financial reporting framework, if those characteristics, if those attributes are there in the contract also, then I will feel it as acceptable. Like for example, in the general applicable financial reporting framework, what do we expect is it should be reliable. The financial statements should be understandable. It should fulfill the requirements of the users. That's what we accept from a normal general applicable financial reporting framework. If these characteristics are also there in the contract, like whatever terms and conditions, whatever rules they have given in the preparation of the financial statements in the contract, they are also understandable. If you follow that, financial statements will be understandable. They will be reliable also. It will fulfill the needs of the intended users also. Then also we will deem it as acceptable. So whatever it is, the first step before accepting the engagement of conducting audit as per special purpose financial statements is what? We need to check that financial reporting framework which is used in the preparation of special purpose financial statements. Is it acceptable? If it is acceptable, well and good, we accept the engagement. If it is not acceptable, we will not. If it is not acceptable, we should not accept the engagement. And as a part of that extension, I have told that financial reporting framework, you might get it from three sources. One is from another organization, one is from some law and regulation, another is from the contract. If it is from other organization and law and regulation, we generally assume it as acceptable. If it is from a contract, we need to determine whatever attributes we expect from a applicable financial reporting framework. All that attributes are also there in contract or not. If it is there, we will consider it as acceptable. So whatever it is, evaluate that and accept the engagement. Okay, I have evaluated all the factors, then I have accepted the engagement. Then I have accepted the engagement. Now you have to plan and perform the audit. No, you have done only acceptance. You have accepted to do the audit of that special purpose framework. Now you have to start planning the audit. Now you have to start performing the audit. Now you have to start planning the audit. You have to start performing the audit. So what factors, what considerations you have to keep in mind while planning and performing such engagement? Very simple. We need to comply with ethical requirements. Even in the audit of special purpose financial statements also, we have to comply with all that 5 ethical requirements. Do you remember what are that 5 ethical requirements? Integrity, objectivity, confidentiality, professional competence and due care, professional behavior, independence, everything here also you have to comply. Number 2, you need to comply with all the standards wherever applicable. If some other, while doing this engagement, if some other standard is applicable, that standard also you have to comply with. Like for example, if you are conducting audit of special purpose financial statements, here also if some going concern related matters are there, SA800 you have to follow. You are conducting audit of special purpose financial statements. In that financial statements, inventory is there. You want to obtain evidence regarding inventory, you have to comply with SA501. So whatever standards which are applicable, whatever other relevant standards are there, all that relevant standards also you have to comply with. Yes or no? Next, you have to do the planning. SA300 requirements you have to comply with. Then you have to determine your materiality. Here also you have to determine materiality. But one slight change here. What is the change here is, when we are doing audit of general purpose financial statements, we decide materiality keeping in mind the information needs of all the users. But while deciding materiality for the special purpose financial statements, we have to decide the materiality keeping in the information needs of only specific users. For the intended user, even small items also could be material. So that we have to sit with that specific user and we have to keep what are his information requirements. According to that, we have to determine the materiality levels. Then after that, we have to fulfill the reporting requirements under SA800. Communication with those charged with governance. We have to communicate some matters with those charged with governance. All that communication matters you have to fulfill. And wherever suitable, you have to obtain written representations, SA580 and all. So these are all the formalities. Generally, whatever we do in the audit, all that matters also we are supposed to do in the audit of the special purpose financial statements, like compliance with ethical requirements, complying with the standards, deciding materiality, doing the strategy planning and program, and communicating with the reporting requirement, communicating with those charged with governance. So all these things we will do. And finally, after we have performed the special purpose framework financial statements audit, even we are required to report also. Even we are required to give your reporting requirements. So here also we will give the audit report. That audit report is also required to be prepared as per the requirements of SA800. Very simple, normal reporting requirements only. If the special purpose financial statements are prepared as per applicable financial reporting framework, that means as per the needs of that special purpose framework, they have prepared the financial statements, then we will give an unmodified opinion. If you have evidence that no, they followed something else than the requirements of the special purpose framework. See, here we will not comment on true and fair view. Here our objective is not true and fair view. Why? Because in special purpose financial statements, true and fair view could be there, could not be there. So when we are conducting audit of special purpose financial statements, what is our whole purpose of verification there? Checking whether financial statements are prepared as per special purpose framework or not. Whatever has been told in the special purpose framework, that has been complied with or not. That is our objective. If complied, we will give unmodified opinion. If not complied, we will give a modified. That could be either qualified, adverse, disclaimer, availability or non-availability of audit evidence, materiality and pervasiveness of the identified or possible effect of the misstatement. So same SA700 requirements and all we will consider, and even we will give our audit reports also. But here they say one more extra thing when you are conducting audit of the special purpose financial statements. See guys, we all know that these special purpose financial statements are prepared only for intended users. And the information in that special purpose financial statements will help only this intended users. This special purpose financial statements and this audit report, this will fulfill the purpose of only that special users. This financial statements will be suitable only for the decision making of that intended users only. Now you tell me, other than intended user, if anybody has got this access to the financial statements and audit report, if he takes a decision on the basis of that special purpose financial statements, will his decisions be correct or will his decisions go wrong? His decisions will go wrong. Don't you think we have to highlight this information? Boss, these financial statements and this audit report is only for so and so intended user, so and so specific purpose. This is not for everybody. Don't rely on this. This we have done it only for the requirements of specific user for a specific purpose. You have to highlight this information in the auditor's report, and SA800 says that you can use the emphasis of matter paragraph to highlight this information. What SA800 has given the guidance? Use the emphasis of matter paragraph. See why? Because that is the only option we have. Other responsibility related matters, we will use it. Emphasis, generally we use it for to highlight any information which is already presented or disclosed. So we don't have any other option. So that's why what SA800 told is use in the emphasis of matter paragraph. Highlight this information that this in financial statements are only for certain people for certain purpose. This is not for everybody. And in addition to that, the standard also says to the extent possible, restrict the distribution of this special purpose financial statements and audit report also. Don't just like normal financial statements upload on your website. Don't just like that circulate it. Do a limited distribution. What do you mean by limited distribution? Whoever is the intended user, to those people only you submit it. Don't unnecessarily update in your websites. Don't unnecessarily circulate it to everybody. So please be careful. Restrict the distribution and use of that special purpose financial statements and the audit report. That's all. Standard is over. That's it. So what we have seen, what is the meaning of special purpose financial statements we have seen, what considerations you have to keep in mind before accepting the engagement. Then we have seen what considerations you have to keep in mind when planning and performing the audit. Finally, reporting, restricting the use of the information and restricting the distribution. That's it. Let us read it. So SA800, special considerations while conducting audit of financial statements prepared in accordance with special purpose frameworks. Let us see what do they say here. Special purpose framework. First, they are defining what is a special purpose framework. SA800 defines a special purpose framework as a financial reporting framework designed to meet financial information needs of specific user. This we have already done it in our introduction chapter itself. Financial reporting framework may be a fair presentation framework, or it could be a compliance framework. Requirements of applicable financial reporting framework define form and content of financial statements and what constitutes a complete set of financial statements. So what should be the form, what should be the content, which items will form part of your complete financial statements, all that will depend on the requirements of applicable financial reporting framework. In this standard, financial statements refers to complete set of financial statements including related notes that contain summary of significant accounting policies. Even when I say special purpose financial statements, it refers to all items of the financial statements along with relevant notes. Now, what are the examples of special purpose framework? Like as you could see here, cash receipts and disbursements basis of accounting for cash flow information requested by creditors. Like for bank loan, you have to prepare the financial statements on cash basis. Or financial reporting provision set by a regulator to meet their requirements, like RERA. You can write RERA example here. Financial reporting provisions in contracts like bond agreements, loan agreements, or project grants. So that also could be a case of special purpose framework. Now, next heading, consideration when accepting such engagement. So what consideration you have to keep in mind? Acceptability of applicable financial reporting framework there. So in case of special purpose framework, financial information needs of intended users are a key factor in determining acceptability of financial reporting framework. So you have to, one of the most important consideration is you need to determine whether financial reporting framework is acceptable. And what is the main factor which you will consider in determining information needs of intended users? So depending on that factor, you will decide whether financial reporting framework is acceptable or not. And as I have told, financial reporting framework can be given by a organization, it can be given by a law or regulation, or it can also be given by a contract. Let us see what they say here. Applicable financial reporting framework may encompass financial reporting standards established by an organization that is authorized or recognized to promulgate standards for special purpose financial statements. That means in some cases you will get that financial reporting framework from one organization which is having the authority to release the standards. And in that case, these standards will be presumed acceptable. Generally, we'll go with the assumption that it is acceptable if that organization follows an established and transparent process involving deliberation and consideration of views of stakeholders. That means if such an organization which has given the financial reporting framework, if it is transparent, it is also taking the assistance of various experts in developing that standards, we generally presume it as acceptable. Then financial reporting framework prescribed by law or regulation. Some laws or regulations may prescribe the financial reporting framework to be used by management in preparation of special purpose financial statements. Generally, as I have told, these are also acceptable. If you read the example, for example, a regulator may set financial reporting provisions to meet its requirement. In the absence of indications to the contrary, such a financial reporting framework is presumed acceptable. Then in some cases, what will happen is, whatever requirements laws and regulations are saying, and whatever requirements normal financial reporting requirements will have, if there is a conflict between the two. Then SA210 says try to resolve that conflict. In some cases, if you are unable to resolve the conflict, don't accept the engagement only. If there is in extreme cases, unless it is required by law and regulation, you don't do such engagements if there is a conflict between what law and regulation is saying and what other generally accepted standards are saying. If there is an extreme conflict, try to resolve it. If you are unable to resolve it, don't accept it unless there is a mandatory requirement on you to do such engagements. So that's what they say here, where financial reporting standards referred to above are supplemented by legislative or regulatory requirements. SA800 requires the auditor to determine whether there are any conflicts between financial reporting frameworks and additional requirement exist, and prescribe actions to be taken by the auditor if such conflict exists. So what you should do if such conflict exists? Either resolve it. If you are unable to resolve it, don't accept such engagements only. Next. Financial reporting framework prescribed by the contract. Applicable financial reporting framework may encompass financial reporting standards of a contract or sources other than those described in the preceding paragraphs. That means sometimes organization will not give the standards, law and regulation will not give the standards. You will get that from other sources like contracts. And as I have told, in that case, acceptability of financial reporting framework in the circumstances of engagement is determined by considering whether framework exhibits attributes which are normally exhibited by a applicable financial reporting framework according to the requirements of SA210. Then, in the case of a special purpose framework, the relative importance to particular engagement of each of the attributes normally exhibited by applicable financial reporting framework is a matter of professional judgment. That means I am asking you to check whatever attributes which are there in applicable financial reporting framework. If the same attributes are there in the contract, then we consider it as applicable financial reporting framework. No, sir, which attributes we expect in applicable financial reporting framework? That depends on the professional judgment. Like I told, reliability, understandability, I told, this is not something which is stated. This is something which I, using my professional judgment, I have decided. So what are that attributes which must be there? That is something which you yourself have to decide on the basis of your professional judgment. Next. So these are the considerations when accepting the engagement. Now let us come to the considerations when you are planning and performing such audit. Number one, as you have told, SA200 requires the auditor to comply with all relevant ethical requirements, including independence relating to the financial statements audit engagement, and even you have to comply with all standards on audit, unless that standard is not relevant for you. You need to comply with all the standards on audit while doing audit of special purpose financial statements, unless that standard is not relevant for you. If I have to give you one example, say for example, SA600 is there. SA600, when it will become applicable? Only when you are using the work of other auditor. Say for example, you are conducting audit of special purpose financial statements and you don't have any other auditors only. So that means their SA600 is not having any relevance. Then you need not comply with the SA600. So you need to comply with all those standards which are relevant for you. If some standard is not relevant or not applicable for you, those standards you can ignore. So whatever it is, you have to comply with all standards on audit, and also you have to comply with ethical requirements. And if you see, it requires auditor to comply with each requirement of a standard, unless in the circumstances entire SA is not relevant or requirement is conditional and the condition does not exist. If that standard is not relevant for you, don't follow it. If the standard will become applicable only when you fulfill some conditions, like for example, if you take SA530, SA530 will become applicable only when you have decided to go for sampling. If you don't go for sampling, SA530 will not be applicable. So unless the standard is relevant for you, unless you did not comply with the conditions to become that standard relevant, try to comply with all other standards. Next. In exceptional standards, the auditor may decide to depart from relevant requirements in the standard by performing alternative audit procedures to achieve aim of that requirement. In such cases, you need to highlight that departure also. That's what they say here. Yeah, that only. Say for example, as per some standard, you are required to perform some procedure, but due to some reason, because of unavoidable circumstances, you are performing some alternative procedure. So you have to highlight why you have deviated from that requirement of the standard and which alternative procedure you have performed. Like for example, say SA501, they are asking you to attend the inventory counting process. Because of some reason you did not attend the inventory counting process. Alternatively, you try to perform some procedures and get the evidence. You have to highlight it. So hence your requirement I did not comply, because of what reasons you are unable to comply with it and what alternative audit procedures you have performed. Next. Application of some of the requirements of SS in an audit of special purpose financial statements may require special consideration. Some standards require special attention in special purpose financial statements. Like as I've already told you, materiality. Materiality needs a special attention. Why? Because in case of general purpose financial statements, we decide materiality based on the needs of various users. But in the special purpose financial statements, we have to decide materiality depending on the needs of intended users. Next. So that's what even they say in the example. Then SA315 requires an auditor to obtain an understanding of entity selection and application of accounting policies. For financial statements prepared in accordance with the contract, auditor shall understand significant interpretations of the contract that management made in the preparation of those financial statements. An interpretation is significant when adoption of another reasonable interpretation would have produced a material difference. So now what they're saying is, when you are, as per SA315, we need to understand about entity, environment and its internal control. As a part of that understanding, we will even try to obtain understanding of accounting policies followed. Now what they're saying is, in case if you are conducting audit of special purpose financial statements, if the framework is given by a contract, you need to even understand significant interpretations from the contract. So what do you mean by significant interpretation? When an interpretation will be considered significant is when adoption of another reasonable method would produce a material difference. Sir, what do you mean by this? Let me give you one example. Say for example, there is one research company. There is one research company. Now there is one pharmaceutical company. Pharma company is also there. Now this research company is doing some projects. What pharmaceutical company told us was, you do one thing, you do the research, whatever research cost you have incurred, we will reimburse it. Whatever research cost you have incurred, we will reimburse it. For that purpose, you need to give us quarterly financial statements according to some special rules and regulations. So pharma company told, you do the research and quarterly you submit your financial statements. How to prepare financial statements, we will give you the breakup. Whatever cost you have incurred on the expenditure, that we will try to give a refund, reimbursement we will give. So in order to get that reimbursement, this research company has to submit quarterly financial statements, that too as per the requirements given in the contract. So now, say for example, in the contract, they told that this pharma company will reimburse expenses relating to research. And in that they told that they will also give reimbursement of direct labor cost associated with the research. What did they mention in the contract? They will give a reimbursement of direct labor cost also. Whatever labor cost they are incurring for that research, that also they will give reimbursement. But they did not define clearly what will be included in the direct labor cost. Now here it needs an interpretation. Now there could be multiple options available. So this research company is saying that when I say direct labor cost, it includes the salaries whatever I am paying. In addition to that, whatever health care, they will take insurance policies and all, no, health care, their staff operations, staff safety, the portion of that also will be included in the direct labor cost. Whereas another alternative interpretation also could be possible. What could be alternative interpretation? Might be tomorrow this pharma company could come and say, no, when I say direct labor cost, I am not talking about all this extra benefits. I am only talking about salaries and wages I have paid. So now this interpretation will become a significant interpretation. Why? Because there is an alternative assumption is available, but if alternative assumption goes, it is going to have a significant impact. Say for example, if you go by the research company's view, the total cost is coming to 10 lakh rupees. If you go by the pharmaceutical company's view, the cost is coming to 7 lakh rupees only. So it is creating a material impact or not. So you need to understand at the time when you are conducting audit of special purpose financial statements, when you are understanding an entity environment and its internal control, especially if the applicable financial reporting framework is given under contract, you read the contract, you need to understand that significant interpretations. Like this kind of significant interpretations, you have to pay attention. Able to understand everybody? So that's what they say here. Once again, if I read it, SA800 requires the auditor to obtain an understanding of entities, selection and application of accounting policies. For financial statements prepared in accordance with the provisions of a contract, auditor shall understand significant interpretations of the contract that management made in the preparation of those financial statements. And when an interpretation is considered significant, when adoption of another reasonable interpretation would have produced a difference in the information presented. Next, in case of special purpose financial statements such as those prepared in accordance with the requirements of contract, management may agree with the intended users on a threshold below which misstatements identified during the audit will not be corrected. Sometimes they also will give instructions, no, you need not worry about the misstatements which are below 5,000. We don't want you to correct it. If at all you find it, then we will follow that. The existence of such a threshold does not relieve the auditor from the requirements to determine materiality. So management will set the limit, pay attention to that. In addition to that, you should also fix your responsibilities regarding materiality as per SA320. Fulfill the requirements of SA320 also. Then SA260 requires the auditor to determine appropriate person within the entity's governance structure with whom to communicate. As per SA260, you have to communicate with those charged with governance. So you have to identify who are the people in the organization who are falling under the those charged with governance definition. And in some cases, management and those charged with governance, both the roles will be played by same people. Then our reporting requirements will change or not? Yes. I told you in SA260, right? When all the people who are involved in the management are also involved in those charged with governance, then you need not do double reporting. If you communicate with one party, the other requirements also will be fulfilled. That they say in the next point. SA260 notes that in some cases, all of those charged with governance are involved in managing the entity, and application of communication requirements has to be modified. If both are playing the same role, then make changes to your communication requirements. And also one more thing they say, when complete set of general purpose financial statements is also prepared by the entity, those persons who are responsible for oversight of preparation of financial statements of special purpose financial statements may not be same as those charged with governance responsible for oversight of preparation of general purpose financial statements. Sir, what do they say here? So what are they trying to say here is, say for example, there is one company X Limited. This is a listed company. They will also prepare general purpose financial statements, like they will prepare financial statements as per Schedule 3 accounting standards. They will upload it on their websites and all. Now for the purpose of loan, they have also prepared the special purpose financial statements. They are having both. They are having general purpose financial statements also. They are having special purpose financial statements also. In some cases, what will happen is, the people who are having an oversight over general purpose financial statements may be different from the people who are having oversight over special purpose financial statements. Like if you take the pharmaceutical company, the previous research company example, whatever I have told, that company is preparing general purpose financial statements. That responsibility was given to CFO. CFO is monitoring the financial statements of general purpose financial statements. Then he will become the relevant person with whom to communicate. But when it comes to this quarterly financial statements, for getting that reimbursement for pharmaceutical company, this responsibility of financial statements was assigned to research head. There is a research head in the company. To that research head, this responsibility was assigned. This research head is looking after the preparation of special purpose financial statements. Now for the purpose of SA260, in the case of special purpose financial statements, who will be that those charged with governance? Research head will be that those charged with governance. So we need to be very careful. The people who are considered as those charged with governance for general purpose financial statements may be different from the people who are considered as those charged with governance for special purpose financial statements. Accordingly, you have to fulfill your requirements under SA260. Then finally, after you have taken all the above into consideration, you have to form an opinion and you have to report. And how do you report that? By following the requirements of SA800. Then description of applicable financial reporting framework. So regarding applicable financial reporting framework in audit reporting, they are telling some points like SA700 requires the auditor to evaluate whether financial statements adequately refer to applicable financial reporting framework. So as per SA700, you need to see that in the financial statements, management is clearly explaining their applicable financial reporting framework. Same thing you need to check for special purpose financial statements also. You need to check in the special purpose financial statements whether management is clearly explaining in the notes to account what framework they are following, why they are following it, for whose purpose they are following it. These disclosures must be given by management, where in the special purpose financial statements. So that's what they say. In the case of financial statement prepared as per the provisions of the contract, auditor shall evaluate whether financial statements adequately disclose any significant interpretations of the contract on which financial statements are based. I have already told you what is a significant interpretation. So management clearly should explain in their notes to accounts all the significant interpretations, all the applicable financial reporting frameworks. SA700 deals with the form and content of the auditor's report, including specific ordering of certain elements. How to prepare the audit report and all. When it comes to this matter, we follow SA700 strictly. Title, addressee, all that we will follow. In case of auditor's report on special purpose financial statements, when it comes to report, some special points they are trying to say. The auditor's report shall also describe the purpose for which financial statements are prepared, and if necessary, intended users, or refer to a note in special purpose financial statements that contain that information. In your audit report, if you feel it necessary, in the case of special purpose financial statements, you can say that financial statements are prepared as per special purpose framework, who are its intended users, or even you can give a reference to a note number. In case if all that information is given by the management in the financial statements in some note, even you can give a reference to the note. So generally we say this in the opinion paragraph. In the opinion we have two sub paragraphs. No, first paragraph we will say financial statements, identify the financial statement, and also we will say that give a reference to the notes, identify the components of the financial statements. 5 items will be there. No. So in that opinion paragraph itself, you can say that these are the financial statements not prepared as per applicable financial reporting framework. These are prepared as per special purpose framework for so and so users, that you can mention in the opinion paragraph only. Then, if management has a choice of financial reporting frameworks in preparation of such financial statements, explanation of management responsibility for financial statements shall also make reference to its responsibility. That means, say for example, management is required to prepare special purpose financial statements as per some contract. Now in the contract itself, the person, the intended user, whoever is there, in the contract itself, he has given two options to choose. Like for example, he asked you to prepare the financial statements either on complete cash basis or modified accrual basis. He has given two options. He told we don't want on accrual basis. Either you follow complete cash basis or you follow modified accrual basis. Here option has been given to whom? Management. So management has to choose one among the two. If such case is there, then in that case, you will give the management responsibility paragraph. No, there you have to add this line. So in the management responsibility paragraph, you have to say that here management has been given two options and the management has chosen so and so option. So that line you have to add. In which paragraph? Management responsibility paragraph. You'll give management responsibility, no? In that paragraph, you have to add this line. So that's what they say here. If the management has a choice of financial reporting frameworks in preparation of such financial statements, explanation of management's responsibility for such financial statements shall also make a reference to its responsibility for determining that applicable financial reporting framework is acceptable. They have given two options. You have chosen one. Why you have decided that is acceptable? So that also you have to add it in the management responsibility paragraph. And in case if you are communicating key audit matters in your audit report, you have to communicate, you have to comply with the requirements of SA800. And even SA720 also will become applicable. Just now as we have discussed, if these special purpose financial statements are getting given with other information, we need to check consistency. If inconsistency is there, what action we have to take as per SA720. So all that requirements here also will become applicable just now as we have completed. So that is why I have first explained SA720. Why? Because this reference will be there in every standard we are going to see now. In 800 also they will give reference. In 805 also they will give reference. In 810 also they will give reference. So if you read it here, SA720 deals with auditors' responsibilities relating to other information. In the context of this essay, reports containing or accompanying special purpose financial statements, the purpose of which is to provide owners, will be deemed to be annual reports. That means if these special purpose financial statements are containing some other information, that other information we generally deem it as annual report. For normal audit, annual report name will be there. But in case of special purpose financial statements, if this information is getting included with some extra information, that we generally consider it as annual report, and our responsibilities whatever we have in SA720 when it comes to annual report, all that responsibilities will be there here also. Next, in case financial statements are using special purpose framework, the term similar stakeholders include specific users. That means when you are giving other information in normal audit, in normal financial statements, they include other information for their stakeholders. No, in special purpose financial statements, they include other information for the purpose of intended users. Next, when auditor determines that entity plans to issue such a report, requirements of SA720 also will become applicable. So these are some few special points regarding applicable financial reporting framework description in the auditor's report. So what they have told here, if I have to give you a summary. So first, management should disclose in the applicable financial statements what is their applicable financial reporting framework. And also management should disclose significant interpretations from the contract. When you are preparing the audit report, you follow the requirements of SA700. Then you should describe, the auditor's report shall describe that this is not general purpose framework, this is a special purpose framework, who is intended user, and also give a reference to the note. So either if you want to say it in the opinion paragraph, or even alternative option, you can do it in the emphasis of matter. Why? Because as I have told, alerting the readers, so that you can use emphasis of matter also. Then if management has a choice between two options, they can choose one, and that has to be added in which paragraph? Management responsibility paragraph. In case if you want to communicate key audit matters, comply with SA701. If these special purpose financial statements are getting published with other information, SA720 requirements also you have to comply. Clear? Next, as I have told, alerting the readers that financial statements are prepared in accordance with special purpose framework. So as I have told, special purpose financial statements may be used for purposes other than those for which they are intended. It might be relied on different people for different decisions. So that's why, to avoid the misunderstanding, auditor alerts users of auditor's report by including an emphasis of matter paragraph that explains that financial statements are prepared as per special purpose framework and they are not suitable for any other purpose. SA706 requires this paragraph to be included in a separate section of the auditor's report with an heading emphasis of matter paragraph. Even an extract of presentation has also been given here, like as you could see. We draw your attention to note number so and so to financial statements which describes basis for accounting. The financial statements are prepared to assist company in complying with financial reporting provisions of a contract, not for everybody. As a result, financial statements may not be suitable for another purpose. Our report is intended solely for the company and DEF Company Private Limited and should not be distributed to other parties. Our opinion is not modified. So like this, you have to add one emphasis of matter paragraph, alerting the users that it is only for special purpose for intended users. Next, as I have told, in addition to all that, you have to even restrict its distribution and use. In addition to alert required as discussed above, auditor may consider it appropriate to indicate that auditor's report is intended solely for specific purposes. Depending on the law and regulation, this may be achieved by restricting distribution or use of the auditor's report. I will give strict management regulations. Sir, don't circulate it. Give it only to your intended users. This should not come out. And also, I will take the help of law and regulation. What the law and regulation says, if they have any stringent provisions, that also I will take into action to make sure that this report is not going to other than intended user. In these circumstances, paragraph alerting readers may be expanded to include these other matters and heading modified accordingly. So in case if you are restricting strictly, that line also you add it. We are restricting this use. If you find this at any other place, it will be a violation. So like that, you can even extend that emphasis of matter paragraph if you are restricting the usage. That's all. This is what regarding SA800. Simple standard, nothing we have learned new. Just we have understood what is special purpose framework, what considerations you have to keep in mind before accepting. That is the only new thing which we have learned practically. Apart from that, nothing else is there. Everything we already know it. So just go through the standard ones quickly. Don't talk. I will make you answer the questions if you talk. Okay, so we'll have a look at the questions now. Very simple questions only we have here. C. Lalita is an auditor of company. She is also offered professional work of audit of financial statements prepared specifically for meeting requirements of a loan agreement for the same period. She chooses to accept the work and has made up her mind to disclose this fact in emphasis of matter paragraph in audit report to be issued by her for this specific engagement. Is her approach proper? Yes. So she's conducting audit. She has been approached and was asked by the company saying that, sir, we have prepared the financial statements as per the reporting requirements of a loan. So for that purpose, they have prepared the special purpose financial statements. Auditor accepted, and she chose to accept the work, and she wants to disclose that fact in the emphasis of matter paragraph. Is that proper? Yes, that's what even we have seen in the reporting requirements also. Next. CA Lakshmi has prepared a draft audit report for financial statements of X Limited, prepared in accordance with the financial reporting provisions of a contract with Y Limited. She has drafted an unmodified opinion to be given in audit report. Besides, she has also drawn attention in draft audit report to note A to the financial statements, which describes the basis of accounting under the heading basis for accounting. How she should ensure that report would not be misused. Draft a suitable paragraph to be included in the report for the same. Alerting the readers. We have seen that paragraph. No, you will use an emphasis of matter paragraph, give a relevance note. There you say that this financial statements are only for intended users, for specific users, for specific purpose. They should not be for everybody. This highlighting where we will do. Generally, emphasis of matter paragraph we will do. So she may consider it appropriate to indicate that auditor's report is intended solely for specific users. Depending on the law and regulation applicable, this may be achieved by restricting the distribution. In these circumstances, the paragraph alerting the readers may be expanded to include these other matters and headed modified accordingly. Heading modified accordingly. So the para will look like basis of accounting and restriction on distribution and use. So like they are referring to that last line, whatever we have read here. So if you see what they are telling, if you want to restrict the use or distribution, so what they have told, you can, in these circumstances, paragraph alerting the readers may be expanded to include those matters, and even they are asking us to modify the heading, no, if required. If you are restricting the use, even in addition to highlighting that, if at all you want, you can even modify that paragraph. So what you can do is, if you want to restrict the use, instead of highlighting that paragraph, instead of using the heading of the paragraph as emphasis of matter paragraph, you can also use this paragraph. This is one illustration for that. How can you modify the heading? So how he has modified the heading? Basis of accounting and restriction on distribution and use. So instead of using emphasis of matter paragraph, he has modified the heading altogether. So without modifying our opinion, we draw attention to note number A to the financial statements which describe basis for accounting. The financial statements are prepared to assist the company to comply with financial reporting provisions of the contract as referred to above. As a result, the financial statements may not be suitable for another purpose. Our report is intended solely for X Limited, and this report should not be distributed or used by parties. So that relevant paragraph has been expanded and even heading is also modified. Next. SA800 deals with special considerations applicable in respect of audit of financial statements prepared in accordance with special purpose framework. Explain by giving examples the meaning of special purpose framework. So they're asking you to give the meaning of the special purpose framework, and also they're asking you to write examples. We have already done it. The first part of the SA800 deals about that only. Next. I think that's it. So many questions we have from SA810, that is where some reporting complications will come. Apart from that, yeah, rest of all the things are relating to SA805 and 810. So now what we should do, I am in a confusion now. So it will take some time. If I start SA805, it will take little time. It will take around 1 hour. Should I give the lunch break now? Huh? Don't want? So I will give the lunch break. Yeah, we'll give the lunch break. But the thing is, lunch break will be little bigger. So I will come back by 2:30. Okay. So today you have 1.5 hour of break, but I will compensate after the break. 2 hours only. See, 2:30 I will start. 4:30 I will leave. The remaining 2 standards will not take much of a time. So since we, as I have told you, this standard also we did not discuss much. Everything is basics only, right? The same thing will get repeated in the next 2 standards also. So little bit than usual, some half an hour extra I will take, and I will complete 805, 810 both. This specialized areas we will wind it up today. Okay, right. Right. So let us resume our discussion. So we have started discussing the specialized areas. How many standards we are supposed to cover? 3 standards we are supposed to cover. Out of that, how many we have done? one we have successfully completed. So now let us try to understand SA805. So SA805 is a standard which is talking about what? SA805 is a standard which is talking about audit of specific item or audit of a single financial statement or specific element or item of the financial statement. So I already explained in the introduction part itself what do you mean by a single financial statement. Like sometimes a client might come to you, ask you, please do audit of only balance sheet, only P&L, only cash flow statement, or he might ask you to conduct only audit of certain aspect, like please do audit of only trade receivable, please do audit of only revenue, please do audit of only tax trade payables. So like that, whenever a client is coming to you and asking you to do the audit of such an engagement, so we will do it. Definitely when the client is ready to pay us, we will be doing it. So when we are doing that engagement, how we are supposed to do it, what and all precautions we have to take, what and all we are supposed to do, let us try to have an understanding of it. So first of all, here also, whatever we have seen in SA800, all that things will remain the same. Whatever we have seen in SA800, all the things will remain the same. Like here, when we accept the audit, we will see what applicable, what financial reporting framework has been followed in the preparation of that single financial statement or specific element of financial statement. Basically, how it has been prepared, what set of rules and regulations are followed. So whether that applicable financial reporting framework is acceptable or not, that we will see. Like in SA800, we have seen whatever framework they have followed is acceptable or not. Here also we will see according to what set of rules and regulations that single element, single financial statement or specific element has been prepared. Is it acceptable or not? Then after that, when it comes to acceptance and performance of the audit, all that things will remain the same. We will comply with ethical requirements. We will also try to comply with all standards on audit unless it is irrelevant or unless the conditions are not present. And also, we will try to decide the materiality. So here also the same, the materiality we have to decide it generally for a specific element or single financial statement. So here the conclusion is whatever materiality we set for the complete set of financial statements, when we compare that with the materiality we set for specific item or single financial statement, tell me which materiality level will be generally lower. Whatever materiality that we are setting for that single financial statement or a specific element, there the materiality levels will be generally lower. And in addition to that, all other requirements, right, you have to communicate with those charged with governance, identify who are that people who are those charged with governance, communicate with them. And here also SA720 requirements will become applicable. If this single financial statement is getting presented with other information, try to check the compliance with SA570, that consistency and all we have to check. So all that you do, but in addition to that, they say one point here. In some cases, the client will ask you to conduct audit of a single financial statement or specific element of the financial statement. If you are not the person who has conducted the audit of complete financial statements, if you are the person who has conducted audit of the general purpose financial statements also, you will have clear understanding about their internal controls, what is their accounting system, and you will get overall perspective. If you are not the person who has conducted audit of the general purpose financial statements, you are only asked to do audit of a single financial statement or a specific element of the financial statement, then in some cases, you might not be able to do the audit of a single financial statement if you are not the person who has conducted the audit of the entire financial statements. The logic is very simple, as I have told. In some cases, just in order to get revenue, if the client is appointing you to do the audit of only revenue recognition, in order to understand the revenue recognition, you might be required to need the overall accounting system first. But that you will get it only when you do audit of the complete set of financial statements. So sometimes if we are asked to do the audit of a specific element, we might not be able to do it on a standalone basis. We might be required to get overall understanding of internal control. We might be required to understand overall understanding of the accounting system. We need to get even interconnected items. Like say for example, if you are required to verify, the client has asked you to verify some item, but that item is linked with the going concern assumption. That item is linked with the going concern assumption. We all know how much headache we have to go through for going concern assumption. So the client will give a minimum fees for conducting audit of a specific element, but that item is linked with going concern. To verify that going concern, I have to do a lot of work. So your work will become very much disproportionate. Whatever is expected from you, whatever you are getting paid, that will become very much disproportionate with the work which you are supposed to do. And in some cases, it might not be practicable also. In those cases, you should not accept audit engagement. If you feel that, if you are not the person who is conducted audit of the general purpose financial statements and you are only asked to conduct audit of a single financial statement or specific element, then you need to analyze, are you in a position to do that? In some cases, you will not be able to do it. Then don't accept such engagements. Or else, what you can advise to do the client is, sir, I can't do audit here. Let us change this engagement to some other form. I can't obtain reasonable assurance. Let us do review. Review is a limited assurance engagement. You need not do in-depth verification in the review. Or let us convert into agreed upon procedure. Let us convert into some assurance engagement. I can't do audit, sir. In audit, I need to have high level of assurance. But this single element or specific item, I can't verify on a standalone basis. I can't do audit. I can't obtain reasonable assurance. So I will not be able to do the audit. Let us do one thing. Let us change the terms of the engagement. Let us make it a review engagement. Let us make it an agreed upon procedure. Let us make it an assurance engagement. So you can change that to an engagement. If the client is ready, no, he insists audit only, we will not do it. If the client says, okay, we will convert that to review engagement and continue with our review engagement, we will not do the audit. So this one extra point you have to keep in mind while doing audit of a single financial statement or specific element. Now let us talk about opinion. Sir, how I am supposed to express an opinion? See, when it comes to opinion in the standard, when we directly read it, you will not be able to understand. First, I will give you a little background. See, opinion is a gray area when you are conducting an audit of a single financial statement or specific element. We can't say if we have verified revenue alone, can we comment without the other information? Is that giving true and fair view? Can we comment without verifying all other? There is no other supporting information. You have only revenue. How can you comment that item is true and fair view or not? You have just verified. You can't say whether that item is giving a true and fair view or not, because that is linked with so many other items. So when you are doing only one specific item or single financial statement verification, sometimes it might not be possible for us that we have verified, that is looking correct only, but it might not be suitable for us to say that that particular item is giving a true and fair view. So how you want to frame your opinion, whether you will say they are giving true and fair view or whether you will say that is appropriate. So that all depends on your professional judgment. What the standard has told us in that particular scenario, you apply your professional judgment. You also pay attention to particular jurisdictions, basically laws and regulations. And you analyze in that particular scenario, will it be appropriate for you to say that financial statements give a true and fair view? If you feel that no, I should not say it, why? Because I have verified only single item, it is linked with various other items, even the existing laws and regulations also don't permit me to say that, then what you do is you use some other appropriate language. Don't say anywhere you are giving a true and fair view. So this is one gray area. That means they have left this area, opinion part, they have left it to the choice of the auditor. So whether you want to say financial statements give a true and fair view, see if it is a fair presentation framework. If it is a fair presentation framework, see we divided frameworks into two categories, right? What are they? Fair presentation, compliance framework. So what is fair presentation framework? Here the financial statements will give true and fair view. Here we will try to prepare the financial statements as per the requirements of the framework, but either we can deviate or provide disclosures beyond the requirements to achieve what? Fair presentation. In the case of compliance framework, we have to strictly follow. See, in the case of complete financial statements, in the case of general purpose financial statements, if it is a fair presentation framework, we will use the phrase financial statements give a true and fair view, or they present fairly in all material respects. One of these phrases we use. If it is a compliance framework, if we are giving unmodified opinion, we will use a phrase financial statements are presented according to the requirements of the compliance framework. Why? Because compliance framework, we need not verify true and fair view. We will simply say what? Financial statements are prepared in accordance with the requirements of the specified framework. This we will say in the case of general purpose financial statements, but in the case of the single financial statement or specific element, it is your choice. You have to decide it whether you can use that phrases or not, using your professional judgment and also depending on applicable jurisdictions, depending on particular jurisdictions. That is basically law and regulations. Able to understand? Clear and comfortable? Say for example, a few more special things we'll try to understand, then we'll directly go and read the standard. See, say for example, if you are a person who is also conducting audit of the general purpose financial statements, and you are also the person appointed to conduct the audit of a single financial statement. Can I use the evidence whatever I have obtained from my general purpose financial statements audit for the purpose of my single financial statement audit also? Definitely you use it. There is not at all a problem. That is even a better situation. If you are the person who is conducting the audit of general purpose financial statements also, and also you are requested to conduct audit of a single element or specific element of the financial statement, you can use evidence whatever you have gathered for general purpose financial statements. No objection for that. And it will overall increase your effectiveness of audit of single financial statement also. There is no objection in doing it. Sir, can I give a single audit report for both? You should not give single audit report for both, because both are two different engagements. For general purpose financial statements, that is for complete financial statements, give a separate audit report. For this single financial statement audit or a specific element, you have to give a separate report. They are getting you paid twice. No, they are paying you twice. Should also give two reports, right? If you give a single report, he will pay you for one engagement only. So that's why, since you are doing two engagements, both the reports you have to give separately. Don't try to merge it. And few more things they say here. See, if complete financial statements are there, take for example, I will give you one example. Take some company X Limited. They have complete general purpose financial statements, and they are also, because of some requirement, they asked you to conduct audit of a single financial statement also. Now, these complete general purpose financial statements, they might have gone through audit. No, they will definitely be audited. Statutory auditor will be there. Statutory auditor will give audit report or not? Yes, he will give audit report. If the main audit report contains unmodified opinion, you need not worry. You will do the audit of a single financial statement. Depending on your observations, you will decide on the opinion, you will decide on the phrasing and all. Now say for example, main audit report, that too on complete financial statements prepared as per general purpose framework. Say for example, the main audit report contains either a qualified opinion or it contains a emphasis of matter paragraph. Listen carefully, important. These areas have undergone some changes. So listen, emphasis of matter paragraph, or it contains an other matter paragraph, or it contains a other information paragraph as per SA800, in which the auditor has explained there is some misstatement in the other information. Where it is there? In which report it is there? This information is there in the audit report of the complete financial statements. What is that? Either a qualified opinion is there, or in that report emphasis of matter paragraph is there, or in that report other matter paragraph is there, or other information paragraph is there, or even material uncertainty relating to going concern paragraph as per SA570. If any of these paragraphs are there, you need to consider whether this will have any impact on the single financial statement or specific element you have audited. You need to evaluate whether you need to give reference or you need to consider that qualified opinion, emphasis of matter, other matter paragraph, or other information paragraph, or material uncertainty relating to going concern paragraph. Is it required to be referred or considered in your audit report on the single financial statements or specific element? That you have to decide it depending on various factors. Let me give you one example. You have the main auditor, whoever has conducted the general purpose financial statements, he has given the audit report. In that audit report, he gave a modified opinion. He gave what? Modified opinion. Why he has given the modified opinion is, in the area of trade payables, he found material misstatement. That's why he has given a qualified opinion. Where it is there? In which opinion? In which report it is there? In the main audit report it is there. Now, this company has asked you separately to conduct audit of revenue. To conduct the audit of revenue, you are doing the specific element audit, only revenue audit you are doing. You tell me, will this qualification will have any impact on my single element? Might not be. Why? Because auditor is giving a modified opinion in the area of what? Trade payables. But you are asked to conduct audit of what? Revenue. Both are completely different areas. So then you might not refer to it in your audit report on the single financial statement or specific element. Let me give you another example. The auditor has given modified opinion In the area of purchases, he found some material misstatement in the area of purchases. He gave a modified opinion because there is a material misstatement here. Now, the client has asked you to conduct audit of only inventory, specific element of the financial statement. Now you tell me, is there any need to consider that qualified opinion, emphasis or other matter, whatever it is in your audit report on the single element? Why? Because both are related. Since something is wrong in the purchases, that will definitely have an impact on my inventory also. So you need to consider it, and also you need to pay attention to it. In some cases, you might be required to give a reference in your audit report on the single financial statements also. Able to understand? See here, they did not give any structure of the audit report. Once again, I am telling here there is no hard and fast rule for audit report. Audit report is completely given to the discretion. In the opinion only, they don't want to interfere what kind of phrase you have to use. They have left it to the professional judgment. So opinion and reporting will look like a bit loose ends. So many loose ends they have kept it there. So in every aspect they have left it to the choice of the auditor. But here they asked you to consider if the main audit report contains qualified, emphasis, other matter, material uncertainty or other misstatements in other information. Consider that even while giving the audit report on a single financial statement or specific element. Whether you will consider or not, it depends on the factors. Whether you will consider it or not, it depends on the various factors. Then one more thing they say. So complete general purpose financial statements are there. On that complete financial statements, audit report has been given. Which auditor has given? The main auditor. On what? Complete financial statements, audit report has been given. In that audit report, adverse opinion is there or disclaimer of opinion is there. Where? In which report? In the main audit report. Which kind of opinion is there? Either an adverse opinion is there or disclaimer of opinion is there. SA805 in that case strictly prohibits that for that entity, if you have conducted audit of a single financial statement or specific element, that report should not contain an unmodified opinion. That report should not contain an unmodified opinion. Why? Because when main auditor himself has told adverse opinion or disclaimer of opinion, that means in the adverse opinion what he is saying, financial statements are completely wrong, they don't give any true and fair view. In the disclaimer of opinion, what he is saying, he is unable to express an opinion. Do you think the main auditor is saying financial statements are completely wrong and a person who has conducted audit of single financial statement is saying that is correct? Do you think it will look proper? No. So that's why SA 805 has prohibited if the main audit report on the complete financial statements contain which opinion? Adverse opinion or disclaimer of opinion. The audit report on a single financial statement or specific element cannot contain an unmodified opinion. But sometimes these auditors of the single financial statements or specific element will be very insisting. They might say that, sir, main auditor has given adverse opinion disclaimer, agreed. But whatever area which I have been given allocated, which I have been doing the audit, that is not linked to that adverse and disclaimer, sir. He found material and pervasive misstatement, or he is unable to obtain evidence regarding material and pervasive items. But the specific item, whatever I am doing audit, that is nowhere related to my adverse or disclaimer. And he is insisting, no sir, this area definitely deserves a unmodified opinion only. If he is so insisting, standard has given the permission, you can do it in exceptional, subject to some conditions. If you are so insisting that even though the main audit report contains a adverse opinion or disclaimer of opinion, but if you still insist that specific element which has been allocated to you deserves an unmodified opinion, the standard has permitted to do it when certain conditions are fulfilled. Number one, the report which you are giving for that single financial statement should not be published together with the main audit report. Both the documents should not be published together. That means both should be published separately. The audit report on single financial statement or specific element should not be published together with the main audit report. Number two, the item whatever you have conducted the audit specific element that should not represent a significant portion of the financial statements. That item should not reflect significant portion. That means it is a minimal part. If it is a significant portion, how can you say that significant part is true and fair when overall opinion itself contains a completely adverse or disclaimer? So two conditions I have told. Number one condition is what? That report should not be published together. Number two, that should not represent significant portion. One more condition is there, I forgot. Let me see and tell. See something, one extra condition will be there. At last that information will be there. Did you find it? No. Not prohibited by law or regulation. Sorry, this is what the condition I have forgot. One more condition is what? It should not have been prohibited by law or regulation. That means law or regulation did not keep any restriction that you cannot give. So like that, there should not be any prohibition from law or regulation. So understood the overall concept here. So if the main audit report contains adverse or disclaimer of opinion, and you are appointed to conduct audit of a single financial statement or specific element of the same entity, can you give an unmodified opinion there? No, you can't give generally. But however, if you are so insisting, SA805 has permitted subject to three conditions. Number one, there should not be any prohibition from law or regulation. Number two, it should not represent significant portion or major portion, it should not reflect. And number three, that should not be published together. Understood? Clear? So these are the key aspects of the standard. Rest of all the discussion will look more or less the same. Now we can read the standard and finish it off. Shall we do it? Oh, understood the overall concept? These are only complicated areas. Just remaining some other areas are there, which will say whatever we have learned earlier. Like the way they will go back to the basic standards once again. So let us have a quick look at it. Come on. Right. So SA805 special considerations when you are conducting audit of a single financial statement or specific elements, accounts or item of a financial statement. So they have defined first the terms. What is a single financial statement? How they have defined it? A single financial statement is to be distinguished from a complete set of financial statements. Like a cash flow statement is a single financial statement. Then what is an element of a financial statement? Element of a financial statement, or simply an element, means an element, account or item of a financial statement. Like examples, accounts receivable is an element. A schedule of externally managed assets for a private pension, that means a part of it. So that could be an element. A schedule of net intangible assets along with the related notes, that could be an element. A schedule of disbursements in relation to lease property, like any one aspect of the financial statements. A single financial statement or specific element of a financial statements, even it includes related notes also. Say for example, when I say you are supposed to do accounts receivable related audit. When I say accounts receivable, it just doesn't include the accounts receivable figure, it includes even the related disclosures relating to the accounts receivable figures also. Next, considerations when accepting such engagement. Here they say the same thing whatever we have learned. SA200 requires you have to comply with all standards. And in case of audit of single financial statements also, this requirement applies. So even when you are conducting audit of a single financial statement also, you need to comply with all standards unless it is irrelevant or unless that conditions are not present. If the auditor is not engaged to audit the complete set of financial statements, they must assess if auditing a single financial statement or specific element is practicable. I told you no. So in some cases, you might not be the person who has conducted audit of complete financial statements. If they are asking you to conduct audit of only one single financial statement or specific element, is it practicable or not? Check it well in advance. Next, SA600 requires the auditor to comply with all ethical requirements and all SS. This we have already seen, right? Next, it requires auditor to comply with each requirement of SA unless it is not relevant or conditions are not present. In case if you are unable to perform audit procedure as given in the standards, you need to perform alternative audit procedures. Same point they have told in SA800 also. Next, compliance with the requirements of SS relevant to audit of a single financial statement or specific element may not be practicable when the auditor is also not engaged to perform complete financial statements. Sometimes you might not be able to comply with all the standards. Like once again, as I've told, they have asked you to perform audit accounts receivable. If you are only doing accounts receivable, you might not have anything to do with SA570. You might not have anything to do with going concern. Will you be able to comply with it? No. Next. In such cases, auditor often does not have same understanding of the entity and its environment, including its internal control. In which case they are talking, if you are not the person who is also conducting the audit of complete financial statements, you might not have a complete understanding of entity, environment, its internal control. You might not understand them completely. And auditor also does not have audit evidence about general quality of accounting records. That information also you will not have. So accordingly, auditor may need further evidence to corroborate audit evidence acquired. So if you are unable to understand internal control, if you are unable to understand accounting system, you can't rely on controls there. You need to perform more and more substantive audit procedures. That's what I told. Their work will become more disproportionate. What you are getting paid, what you have to do becomes completely disproportionate there. So in case of audit of a specific element of financial statements, certain standards require audit work that may be disproportionate to the element being audited. If auditor concludes that an audit of a single financial statement or specific element of financial statements in accordance with SAs may not be practicable, auditor may discuss with the management whether any other type of engagement might be more practicable. As I have told, if you feel that audit might not be possible, you have to change it to some other engagement. Like which engagement you have to change it? Review engagement, assurance engagement, agreed upon procedures. Change it to some engagements which give you lower level of assurance. If you feel that if you are unable to give the reasonable assurance there. Next, acceptability of financial reporting framework. Here also, before we accept the audit, we need to check whether the financial reporting framework is acceptable or not. So here what they say, SA800 requires the auditor to determine acceptability of financial reporting framework. For every audit, we have to do it. In case of audit of a single financial statement or specific element, this shall include whether application of financial reporting framework will result in a presentation that provides adequate disclosure to enable intended users to understand the information conveyed in financial statements or the element and the effect of material transactions. So once again, the same point like they have told in SA800, whether applicable financial reporting framework is acceptable or not. That depends on what? Whether it will fulfill the intended needs of the intended users. The same thing they put it in a different language. Whether the financial reporting framework will be acceptable or not, that depends on whether it is resulting in a better presentation, which will help the intended users to understand that specific element and the effect of the transaction. Same only, but they have just changed the language. So here what you have to write is whether applicable financial reporting framework used in preparation of a single financial statement or specific element is acceptable or not. It depends on whether it is giving a better presentation of that item or not. Next, a single financial statement or specific element of a financial statement may be prepared in accordance with an applicable financial reporting framework that is based on financial reporting framework established by an authorized or recognized standard setting organization for preparation of complete set of financial statements. Now what is this? I'll give you one simple example. See, our ICA has given standard, our ICA has given Schedule 3 accounting standards, Companies Act we have. So if you take normal companies for complete financial statements, what is the framework we follow? Schedule 3 accounting standards. Sometimes what client will do is even for preparing the single financial statements also, he will extract that relevant portion of the Schedule 3 and accounting standards and he will apply it. That also will happen, no? So that's what they say here. A single financial statement or specific element of financial statement may be prepared in accordance with an applicable financial reporting framework. And that is based on financial reporting framework which is established by an authorized or recognized standard setting organization like accounting standards, Schedule 3. From that only relevant extract we will take and apply it for our single financial statement or specific element. If this is the case, determination of acceptability of applicable financial reporting framework may involve considering whether it includes all the requirements of the framework on which it is based that are relevant to presentation of a single financial statement or specific element. So if here the language they make it very complicated, but I will try to make it simple for you. So Ind AS and Schedule 3, this is the framework for complete set of financial statements. Now you are supposed to conduct audit of only balance sheet. So now the management what they have done is even for preparing the balance sheet alone also, they have followed relevant extract of the Ind AS, whatever standards which are dealing with the balance sheet items and whatever presentation given for the balance sheet they have extracted. So that they have followed in the preparation of the single item which is balance sheet. Now, whether that framework is correct or not, whether that framework is acceptable or not, how will I decide? I will decide based on whatever aspects of the Ind AS are there, whatever aspects of the Schedule 3 are there relating to the balance sheet, whether all that have been included or not. Not doing half, whatever that specific aspect is there, whatever provisions relating to that aspect given in Schedule 3, whatever provisions given to that aspect in Ind AS, everything should have been included. Then I will accept it as applicable financial reporting framework. One simple example, once again I have to give you. See, the management told that, sir, the balance, you want to do only balance sheet. We have prepared that balance sheet as per Ind AS. But what the management has done is, while preparing that balance sheet, they did not consider the financial instruments Ind AS. They did not consider financial instruments Ind AS. Rest of all the Ind AS they have considered. Tell me, can you call that as acceptable? No. Why? Because they did not include all the requirements which are applicable to that specific element or single item. So if you have extracted, if you want to follow the main applicable financial reporting framework only, follow everything which is relevant to that single item. Don't do half. Able to understand here? Right. So this is what regarding acceptability of financial reporting framework. Whatever it is, you have to decide whether financial reporting framework is acceptable or not acceptable. Next, considerations when planning and performing the audit. When you have actually started performing and planning the audit, then what things you have to keep in mind. In planning and performing audit of a single financial statement or specific element, the auditor shall adapt all essays relevant to the audit as necessary. Once again, repeated point, you have to comply with all standards wherever it is relevant. And relevance of each standard requires special consideration. Even you might be required to consider SA800 fraud in whatever element you are conducting the audit that might contain a fraud. If yes, SA240 you have to comply with. Related party. So if the item you are conducting the audit contains a related party transaction, 550 you have to comply with. If your item is related to going concern related matters, if related, not always, if related, then you have to comply with SA570. And like any other entity, you need to comply the communication requirements as given under SA260. And here also same point. If all those charged with governance are involved in managing the entity also, you have to make changes to your reporting requirements. Then, when auditing a single financial statement or specific element, in conjunction with audit of entities, complete set of financial statements, auditor may be able to use audit evidence obtained from audit of entities complete set. So as I have told, if you are doing audit of both, comfortably you can use the evidence which you have gathered for complete financial statements. Standards, however, require auditor to plan and perform audit of financial statements or the element to obtain sufficient and appropriate audit evidence to which to base the opinion. You can use the evidence. That doesn't mean you can use only that evidence and don't perform any extra procedure. You have to perform these procedures relevant to it. In addition to that, you can use evidence. Once again, as I have told, you are getting paid twice. Do the work also little bit twice. Next, the individual financial statements that comprises complete set of financial statements and many of the elements of those financial statements, including their related notes, are interrelated. As we all are aware, all the items of the financial statements are closely interrelated with each other. Accordingly, when conducting an audit of a single financial statement or specific element of a financial statement, auditor may not be able to consider financial statements or element in isolation. You can't treat it as a standalone item and do it. It's related items also. Sometimes you might be required to look into it. Consequently, auditor may need to perform procedures in relation to that interrelated items also. Furthermore, materiality determined for a single financial statement or specific element of financial statement may be lower than materiality determined for entities complete set of financial statements. That I have already told you, right? Generally for complete set of financial statements, we fix materiality. For single element or specific item also, we fix materiality. Which one will be lower? That single element or specific element, that will be generally lower. So this will affect the nature, timing and extent of audit procedures. Now comes the form of opinion. As I have told, they say a lot of things here. Summary is this. What kind of phrase you have to use, that is left to your professional judgment, keeping in mind the particular jurisdictions. That is what the summary you will find there. That is what the final conclusion, but they will not say it straight away. They try to beat around the bush. Ultimately, the conclusion is this. Okay, let us try to understand anyhow what they are trying to say here. SA210 requires that agreed terms of audit engagement include expected form of any reports to be issued by the auditor. SA210 says that generally whenever you are drafting the engagement letter, in the engagement letter itself you have to say what will be your expected form of report, how you are going to give your report, according to what you have to prepare the report. That should be identified where in the engagement letter only. What standard says it? 210 says. That's why even if you go and look at the contents of the engagement letter, they will say expected form and content of the report, they will say. So generally in the engagement letter only we have to agree what kind of report we are going to give, how we are going to give the report. In case of an audit of a single financial statement or specific element, auditor shall consider whether expected form of opinion is appropriate. So you need to consider if the management is expecting from you to comment, that you have to say whether the specific element is giving a true and fair view or not. That is what the expectation of the management. You decide, will it be appropriate? Can I do that? Why? Because single financial item is a one of the component. Whether entire financial state, whether that item will give a true and fair view or not, I can't comment it like that in some circumstances. So if the management is expecting you, they will tell you, sir, this is how we want the report. So determine, will that be possible? Will that be appropriate? You have to determine it. Next, the form of opinion to be expressed by auditor depends on applicable financial reporting framework, and it also depends on laws and regulations. And in accordance with SA800. Now they talk about, they use the phrases, they give the phrases here from the perspective of complete financial statements. Generally what phrases we use as per SA800. So when expressing an unmodified opinion on a complete set of financial statements as per fair presentation framework, auditor's opinion, unless otherwise required by law or regulation, uses one of the phrases. Which phrase they will use generally for complete financial statements? Either financial statements present fairly in all material respects, or you can use the phrase financial statements give a true and fair. This is in the case of what? Fair presentation framework, unmodified opinion. And when expressing an unmodified opinion on complete set of financial statements as per compliance framework, their auditor's opinion states that financial statements are prepared in all material respects in accordance with applicable financial reporting framework. Here we will not say true and fair. This phrase is when we use complete financial statements. First they are saying, so they are coming to the ultimate conclusion, but before giving that ultimate conclusion, they are setting the base here. Next, in case of a single financial statement or specific element, applicable financial reporting framework may not explicitly address presentation or of that element. This applies when applicable financial reporting framework is based on a financial reporting framework set by an authorized or recognized standard setting organization. See, when you look at Schedule 3 and accounting standards, Schedule 3 and accounting standards gives you guidance when entire financial statements will give a true and fair. Schedule 3 and accounting standards was not designed to give true and fair view of only balance sheet, only P&L. Such guidance it will not provide. If you follow Ind AS and Schedule 3 completely on the entire financial statements, then we can comment whether we are giving a true and fair view or not. But you can't say for one element you have followed Schedule 3 and Ind AS, then you can't say that item is giving true and fair view because I have followed the requirements of Ind AS and Schedule 3. Because Ind AS and Schedule 3 has been designed for entire financial statements perspective, not from the perspective of a single element or specific item. Next, auditor therefore considers whether expected form of opinion is appropriate. So keeping all the above factors in mind, you have to decide which form of opinion, how you have to give your opinion, and what is expected from you by the management, will it be appropriate or not. Factors that may affect auditor's consideration as to whether to use the phrases present fairly in all material respects or gives a true and fair view in the auditor's opinion include, as I have told, whether you should use the phrase true and fair view or not, that you have to decide it on the basis of your what? Professional judgment. So while taking that decision, you have to consider some factors. What factors you will consider? Number one, whether applicable financial reporting is explicitly or implicitly restricted to only preparation of complete financial statements. Like for example, if you read Ind AS and Schedule 3, Ind AS and Schedule 3 explicitly or implicitly says that this is the framework only for complete financial statements. That means that framework is nowhere saying that it is designed only for single financial statement or specific element. You tell me, in that case, will it be suitable to use true and fair view? No. However, there will be some frameworks which say that even if you follow this framework for balance sheet also, it will give true and fair view. If that permission is there, we will use the phrase true and fair view. No, if that framework specifically, either explicitly or implicitly says that this is only for complete financial statements, then we will not use true and fair view phrases anywhere in our audit report. Or whether single financial statement or specific element of financial statement will comply fully with each of those requirements of the framework relevant to particular financial statements or particular element, and presentation of financial statements or specific element of financial statement including related notes. Or If necessary to achieve fair presentation, it provides disclosures beyond those specifically required. In exceptional circumstances, even it will depart. So one more factor what they are considering is when you can, one more factor which you will consider for deciding whether you can use true and fair view is not. Sometimes what some people will do is, even though they are asking you to conduct audit of only balance sheet, but management what they have done is, even though they are doing the balance sheet, they have even on an extract basis prepared P&L also, all the related notes also, they have complied with all the standards also, they have given all the disclosures also. Even though they are asking you to conduct audit of only one element, but they have considered, they have gone beyond. So they have included everything. This will not happen. This no one will do. If they have to do this, they will get the audit of complete financial statements only. No one will do. That's why only we will not use true and fair view. Second circumstance will not be possible. If possible, if they have taken that extra step, even though they are asking us to audit of only single financial statement, but they have prepared complete financial statements, they given all the disclosures, they provided extra disclosures, they departed to achieve the fair presentation. All this will not happen. If it happens, then it will be suitable for you to use the phrase true and fair view or they present fairly. Understood? Now comes the conclusion. This is all the base. Now what is the conclusion? Auditor's decision as to expected form of opinion is completely a matter of professional judgment. Consider all the above factors and accordingly you take a call whether it will be suitable for you to use which kind of phrase. It may be affected by whether use of the phrases present fairly in all material respects or give a true and fair view in auditor's opinion on a single financial statement or specific element is generally accepted in particular jurisdiction. Nothing but once again laws and regulations. You decided using your professional judgment, and while taking that judgment also consider what is the requirements of particular jurisdiction. Jurisdiction means what? Laws and regulations, whether it is permitted or not. Understood? So all the basic things they have told. Then finally what they have concluded here, which kind of opinion or what phrases you have to use, you decide it on your professional judgment, paying attention to the laws and regulations. Next, forming an opinion and reporting considerations. Let us see what they are saying. When providing an opinion and reporting on single financial statement or specific element, auditor must follow the requirements of SA800. See, opinion, if you keep it, all other contents should be there. Title, addressee, management responsibility, auditor's responsibility, that all contents will be there. Opinion, they are giving it to your choice. And where applicable, SA800 also you have to adopt it. Where you will adopt SA800 is here for using the phrases. All other contents you have to follow it as per SA700. The auditor is also required to apply the reporting requirements from other SAs adapted as necessary and may find the considerations. If at all there are any other reporting requirements in other standards, follow that as well. Revised SA700 requires auditor when forming an opinion to evaluate whether financial statements provide adequate disclosures to enable intended users understand the effect of material transactions and events on the transactions. When forming opinion, you have to check whether management has given all the disclosures which are relevant for the intended users or not. Now once again, common points. All this we do in the regular audits also. Next, for a single financial statement or specific element, it is important that financial statements or element including related notes, they provide additional disclosure. Once again, repeated point. We need to check whether financial statements are giving all the disclosures required for intended users to understand them in a better manner or not. Going concern. See, if you are doing audit of a specific element or single item which has nothing to do with going concern, then in the management responsibility paragraph, you need not state that management is responsible for making an assessment regarding going concern. We have read the management responsibility paragraph now. There we will say one point which will come in management responsibility, that management is responsible for making an assessment relating to going concern. If the single financial statement or specific element which you are doing the audit has nothing to do with going concern, exclude that point only from the management responsibility. Make the same change in auditor's responsibility also. If you have nothing to do with the going concern in that matter, even in your auditor's responsibility also, exclude that point that you are required to make an assessment regarding going concern of management's evaluation. Don't do it. So that's what they say here. Depending on applicable financial reporting framework, description in the auditor's report of management responsibilities may need to be adapted as necessary. Same change you have to make it even in the auditor's responsibility. Next, key audit matter. If you want to include key audit matter in your audit report, follow the requirements of SA 701. Other information, same as we have seen in SA800. If this single financial statement is getting presented along with other information, check that consistency and reporting requirements as per SA720. Next, after all this, it should contain signature of auditor. So audit report shall be signed by auditor in his personal name. If he is getting appointed in the name of the firm name also you have to mention. You have to mention your membership number, and along with that you should also mention UDIN. They should also include registration number, and even UDIN also required to be given here. This essay requires the auditor to consider implications of matters in the auditor's report on complete set of financial statements for the audit of a single financial statements or specific element. Determining the relevance of this matters require professional judgment. As I have told, qualified opinion, emphasis of matter is there in the main audit report. Its impact you have to consider it on audit report of single financial statement. Whether you will consider it or not, it depends on professional judgment and it depends on various factors. I give you one example, no? Like there is a problem with a trade receivable. Regarding that, something has been mentioned in the main audit report. Will you consider that or will you not consider that? That depends on various factors, right? What are that factors that they will say it in the 10th point? What are that factors that you will consider if there is any matter in the audit report of complete financial statements, whether you will consider that for the audit of a single financial statements audit report or not? That depends on various factors. What are that factors? Number one, nature of the matter. Nature of the matter in the sense, regarding which matter that modification is there, that highlighting is there, you have to check. Here is what that example comes. Trade receivable modified opinion is there, but you are conducting audit of trade payable. No need to consider it. It also depends on pervasiveness of the matter described in the auditor's report. What is the significance of the matter because of which contain difference in the main audit report. It also depends on nature and extent of the differences between applicable financial reporting framework. If you are using different applicable financial reporting framework, then you might not consider it. It depends on extent of difference between periods covered by complete set of financial statements compared to dates of single financial statement. Might be the main audit report is for the entire financial year, but you are conducting audit of a balance sheet not as on 31st of March. The client has prepared balance sheet on 30th of June and on that they are asking you to do the audit. In that case, you might not be required to consider. If you are also asked to conduct the audit of balance sheet on 31st of March only, then we will see what matters are there in the main audit report and I will consider it. And it also depends on time elapsed since the date of main audit report, how long that audit report has been given. See, as we all are aware, when the time lapses, that will become irrelevant. Might be that might have been rectified in the meantime. So whatever information which is there in the main audit report, whether you have to consider it or whether you have to refer to it in your audit report on single financial statements or not, it depends on various factors. So 5 factors they have told here. What are the 5 factors? Nature of the matter being described, pervasiveness of that matter, nature and extent of differences between applicable financial reporting frameworks, extent of difference between periods covered by the complete financial statements and single financial statement, the time which has elapsed from the main audit report. Next. Now, inclusion of a reference to auditor's report on complete set of financial statements. So as you see here, when certain matters included in the auditor's report on complete set of financial statements, if they do not have any implications for the auditor's report on single financial statement or specific element, auditor may deem it appropriate to refer the matters in other matter paragraph. If you feel that they don't have any direct impact on single financial statement, but still if you feel it appropriate, somewhere I have to mention it, use the other matter paragraph. Like say for example, in the main audit report, there is a material uncertainty relating to going concern paragraph. That has nothing to do with the single financial statement or specific element you have audited. You don't want to consider that modification and all, but still you thought that better if I highlight it. Why? Because in the main audit report, there is a material uncertainty. You wanted to say that somewhere in the audit report on your single financial statement or specific element. They don't have any implication. If it is having any implication, we will consider it in the opinion paragraph, other matter paragraph, emphasis, we will anyhow do it. If you don't have any implications also, but still if you feel it is so relevant, you want to say it somewhere, what you do is, the standard what it say, use other matter paragraph and highlight it there. So even if you look at the example also, same example I have given, auditor may consider it appropriate to refer in the auditor's report on single financial statements or specific element to material uncertainty relating to going concern. Even if it is not having any implication, but still if you thought of it highlighting, use other matter paragraph for that. Next. If auditor undertakes an engagement to report on a single financial statement or specific element in conjunction with an engagement to audit entities complete set of financial statements, what did I say? He has to express a separate opinion. Then single financial statements or specific element published together with audited complete set of financial statements. Sometimes what will happen is the single financial statements and complete financial statements, they may be published together. Both will be published together. In case if they are getting published together, ask the management to differentiate it. Why? Because sometimes what will happen is on the main audit report there could be a, I could say true and fair. But I felt that in the single financial statements using true and fair is not appropriate. I use different phrases. So should the management differentiate it or mix it both together? They have to differentiate. If they mix it both together, what will happen? People will feel that even that single financial statement also have expressed a true and fair view. So that's why audited financial statements or specific element may be published together with complete financial statement. If the auditor concludes that presentation of single financial statement or specific element does not differentiate, see, both you can send it in the same document, but give appropriate headings so that we can differentiate. Don't club them immediately or without side headings, you don't do it. Give appropriate heading. Leave a page gap so that people can differentiate it. So when both are getting published together, ask the management to differentiate. If you find that management does not differentiate it, then ask the management to rectify. Sir, please do the bifurcation. You are not doing it correct. Add one page or start this in the fresh page. Do something to bifurcate. Auditor shall also differentiate opinion. As I have told, two different opinions you have to give. You can't give a single audit report. Auditor shall not issue auditor's report containing opinion on single financial statement or specific element until satisfied with that bifurcation or differentiation. Till the moment you got satisfied with the bifurcation, you should not do it. Next, consider implications of certain matters included in the auditor's report on entity's complete set of financial statements for audit of a single financial statement. As I've told, sometimes you are required to consider implications. When, sir, as I've told you here, if the auditors report on entity's complete set of financial statements, they include a modified opinion, or they include an emphasis of matter or other matter paragraph, or they include an material uncertainty relating to going concern, or it contains a statement that describes an uncorrected material misstatement of the other information, then auditor shall consider implications, whether any of this is having on the audit report for a single financial statement or specific element. Then comes the next point, adverse opinion or disclaimer of opinion, where in the auditor's report on complete financial statements, if the auditor expresses an adverse or disclaimer of opinion on complete set of financial statements, SA800 does not allow unmodified opinion on single financial statement or specific element. This is because such unmodified opinion would contradict adverse or disclaimer of opinion on complete financial statements as a whole. But however, as I have told, if the auditors conclude that it is necessary to express an adverse or disclaimer on complete set of financial statements, but in the context of separate audit of specific element included in the financial statement, auditor nevertheless considers it appropriate to express an unmodified opinion. He is insisting. Might be main audit report might contain an adverse or disclaimer, but whatever specific element I have audited, whatever single financial statement I have audited, that deserves an unmodified opinion on that element, the auditor shall do so only if auditor is not prohibited by law or regulation. That opinion is expressed in auditor's report, that is not published together with auditor's report containing the adverse opinion, or the element does not constitute a major portion. All the three conditions must be fulfilled, then only you can give a unmodified on the single element or specific item. Next, auditor cannot express an unmodified opinion on a single financial statements if they have an adverse or disclaimer opinion on complete financial statements, even if reports are not published together, because if it is a major portion. So just because they are not published together, you can't give a different unmodified opinion. When you can do it? Only when it is not representing a substantial portion. Next, in the auditor's report on entity's complete set of financial statements, see, this is one decision which has been given. In one case, depending on one case, this decision has been given. So let us see what that decision has been given. If the auditor's report on entity's complete set of financial statements, expression of disclaimer of opinion regarding results of operations and cash flows were relevant, and an unmodified opinion regarding state of affairs is permitted, since a disclaimer is issued in respect of results of operations and cash flows, not in respect of financial statement. So in one case, what they have got is, if the auditor, main auditor, if he has given disclaimer of opinion. Why? Because he is unable to obtain evidence regarding operations. That is, he is unable to obtain evidence regarding P&L items. He is also unable to obtain evidence regarding cash flow. That's why he has given disclaimer of opinion. In that case, what they have told is, if you are only asked to conduct audit of balance sheet, if you want to give unmodified opinion, you can give it if you are satisfied. Why? Because main auditor gave disclaimer because he is unable to obtain evidence regarding only cash flows and P&L items. If you are asked to conduct audit of a only single financial item, that is that to balance sheet only, And if you are satisfied with everything on the balance sheet, you can give unmodified opinion on it. But once again, the three conditions have to be fulfilled. The three conditions have to be fulfilled. What are the three conditions? No prohibition from law or regulation. That should not represent a significant portion. And also these reports should not be published together. If all these three conditions are fulfilled, then you can do it. Then SA800 and SA805 do not override the requirements of other standards, nor do they purport to deal with all special considerations that may be relevant in the circumstances of the engagement. That means SA800 and SA805 not overriding any standard. These will play their role, other standards will have their own role. Like SA501 says you need to obtain evidence regarding existence and condition of inventory. If you are asked to do audit of only inventory, you still have to comply with SA501. So SA800 and SA805 don't have any overriding effect on other standards. They have their relevance. These standards have its relevance. Understood? Clear everyone? That's all. SA805 also we have completed. Just give a quick glance of the standard ones. So now since we have, this is the difficult part in SA800 series. Next standard is very easy. 810 is very easy. Summary financial statement. Go through this standard once. SA805, do it once. Don't talk. Right, so we'll do the questions. See, in this chapter you will not have any twisting. Why? Because everything I have covered in my discussion only. So all the examples, the way I'm giving the examples and all, those are all actually taken from the question banks only. So let us see it. 805. Let us see here. C.S. Surya is auditor for financial statements of an entity prepared in accordance with financial reporting provisions of a contract, special purpose framework. He is also offered an audit of only trade receivables appearing in above financial statements. Two engagements he got. One is to conduct audit of a special purpose financial statements prepared in accordance with contract. And also he has also been asked to conduct audit of only trade receivables, specific element, SA800 and 805. Can he accept such an engagement? Yes. Discuss briefly outline of his audit approach. What should be your overall approach for doing this audit? So a brief you have to give, a summary of 800 and 805, whatever we have seen, a brief, in one paragraph you have to give the brief kind of thing. So let us see what they have given in the answer. The single financial statement or specific element, account or item of a financial statement may be prepared in accordance with a general or special purpose framework. If prepared in accordance with a special purpose framework, what will become applicable? SA800 also will become applicable. Now, what they're even trying to say here is, see, sometimes what will happen is, the client will ask you to conduct audit of specific element. Say, for example, the client is asking you to conduct audit of a balance sheet only. Now, this balance sheet can be prepared as per general purpose framework, and this specific balance sheet can be prepared as per special purpose framework. If you are conducting only audit of a balance sheet prepared as per general purpose framework, then only SA700 and SA805 will become applicable. Why? Because you are conducting audit of only one specific element prepared as per general purpose framework. In case if you are conducting audit of only balance sheet, that balance sheet is also getting prepared as per special purpose framework, then SA800 also will become applicable, SA805 also will become applicable. You have to ensure compliance with both the standards. Next. What? So 805, they talk about specific element, but generally, as I am telling, specific element when you are doing, unless there is a dedicated framework for that single item, it will always become a special purpose framework. Unless we have for that specific element a dedicated framework, then it becomes a general purpose framework. But in most of the cases, when you are doing specific element, automatically that will be a special purpose framework in majority of the cases. Next. In the given case, financial statements of an entity are prepared in accordance with financial reporting provisions of a contract. It is a special purpose framework. The auditor of the financial statements prepared in accordance with special purpose framework is also offered to audit trade receivables appearing in the above financial statements, which relate to the audit of elements of financial statements prepared in accordance with special purpose framework. Hence, its audit approaches should include both the 800 and 805. Next. CAG is offered appointment for audit of trade payables of financial statements of a company. However, financial statements prepared under Companies Act 2013 are audited by another auditor, CA Jignesh. Discuss why it would be practically difficult for CAG to perform such audit. Why it could become practically difficult? We told 2-3 lines. Number 1, he will not have understanding of accounting controls and accounting system. He will also not have a proper understanding of overall reliability of the accounting records. Because of that reason, he needs to obtain more corroborative evidence. Because of this, work will become disproportionate with the scope of your work. That's why it might become impracticable. So that 3-4 lines are there now, which will explain why it is impracticable. That 3-4 lines you have to write. And finally, write the conclusion also. If it becomes impracticable, what is the course of action? Either reject that engagement or reduce that engagement to a different form, like review, assurance, or whatever it is. Next. This is 5 related to summary. This is relating to 810. This is also 810. No, here 805 we have. CAP is an auditor of company responsible for auditing the complete set of financial statements. He intends to express an adverse opinion on complete set of financial statements, considering conclusions drawn by him during the course of audit. He is also auditing trade receivables of the company for the same period in a separate engagement. Can he express an unmodified opinion in respect of trade receivables? Generally, no. But however, when it is permitted, that 3 exceptions. So that is how you are supposed to write the answer. Next. 10. See here. CA Rajni is appointed as a statutory auditor of STS Limited for the financial year 23-24 for auditing complete set of financial statements. The company has also assigned the audit of PPE to CA Rajni as separate engagement for the financial year 23-24. While drafting the audit report of complete set of financial statements, CA Rajni decides to give an adverse opinion based on audit observations noted during the course of audit. At the same time, she is also finalizing the audit report of separate engagement, where she wants to give unmodified opinion. Generally, can he do it? No. But when she can do it, 3 conditions. That relevant paragraph you are supposed to write here. Next. That's all. These are the questions from SA805. Now let us talk about SA810. Since you are all capable to understand 805, 810 is damn easy, very simple, but a little bit technical also. When it comes to reporting, they say very interesting and technical points. Let us try to understand it. So what do they say here? SA810. What is the title of the standard? Engagements to report on summary financial statements. I have already explained you, right? When a need might come for you to prepare the summary financial statements, currently now they are not doing it, but previously they used to do it. That abridged financial statements used to be very, very popular for the purpose of circulation, but now very few companies will do that summary financial statements audit. Now, one thing we have to get it clear. A few things we have to get it clear. This standard is unique in certain ways. One main condition which this standard says is, you should accept audit of summary financial statements only if you are the same person who has conducted the audit of the complete financial statements. This condition is not there in 800. This condition is not there in SA805 also. But in SA810, they have a specific condition. If you are not the person who has conducted the audit of the complete financial statements, you aren't supposed to accept the audit of summary financial statements. Why? Because when you are conducting audit of summary financial statements, what we are checking there is whether summary financial statements are properly summarized from the complete financial statements or not. We don't obtain any evidence whether items in the summary financial statements are correct or not. Whether revenue in the summary financial statements, that figure is correct or not, we will not check. If we are appointed as auditor for conducting audit of summary financial statements, there our objective is to check whether financial statements are summarized properly as per the complete financial statements. So you must be the person whoever has conducted the audit of complete financial statements. Then only you can appoint, then only the same person shall be appointed to conduct audit of summary financial statements also. But that condition is not there for previous two cases. If you are not the person who has conducted the audit of general purpose financial statements, still you can accept the appointment of conducting the special purpose financial statements. If you are not the person who has conducted the audit of the complete financial statements, still you can be the person to conduct audit of a single financial statement or specific element. But if you are not the person who has conducted the audit of complete financial statements, you can never conduct the audit of the summary financial statements. That they have made it clear. So in case if you are conducting audit of summary financial statements, what you are supposed to do, what is your complete objective when conducting the audit of summary financial statements is, this we will try to link it with normal financial statements audit. See, normal financial statements, what as an auditor we verify? As an auditor we verify whether financial statements are prepared as per applicable financial reporting framework. This is what we do for normal audit now. Now what they say here is, for summary financial statements, as an auditor what we need to verify is whether summarized financial statements are properly summarized as per applied criteria. That's it. Everything else will remain the same. Whether in case of normal audit we say whether financial statements are prepared as per applicable financial reporting framework. Now throughout the standard what you will find is, in place of normal financial statements they use the phrase summary financial statements. In case of applicable financial reporting framework they use the phrase applied criteria. Nothing but the criteria on the basis of which summarization has taken place. That we call it as applied criteria. So in normal financial statements audit we will check whether applicable financial reporting framework is acceptable or not. In summary financial statements what we will check? Whether applied criteria is acceptable or not. So everything, whatever phrases we generally look for audit, the same phrases you will be able to find throughout the standard, with only one difference. What is that? There in normal standards they say applicable financial reporting framework, here they say applied criteria. In normal financial statements audit they use the phrase normal financial statements, here they use the phrase summary financial statements. Everything else will remain the same. Okay, clear and comfortable everybody? And if I am conducting audit of summary financial statements, am I obtaining evidence regarding the items in the summary financial statements? No. If I am conducting audit of summary financial statements, I will not obtain evidence regarding the items on the summary financial statements. If in the summary financial statements revenue is 5,000, I will not obtain evidence whether that 5,000 is correct or not. I will check whether that revenue of 5,000 has been properly taken from summary financial statements. In the complete financial statements. That means in the complete financial statements, how much revenue is there? That much revenue has only come into my summary financial statements. I have nothing to do with obtaining evidence whether that figure is correct or not. Whether there is evidence for that figure or not, I have nothing to do with. Only I will see whether the information has been summarized properly or not. That's it. Clear and comfortable everybody? So now rest of all the standard just like that we can read and complete it. But reporting, that is where we will get stuck. Let us try to understand, let us try to sort out that reporting concept clearly. Okay, come on. Let us do it now. Listen carefully, I will give you time to copy. Important thing. See, when we are conducting audit of summary financial statements, what we are checking? What we are checking? When you are, listen, I will give you time to copy. Don't worry, I will give you some time to copy. Listen, this, if you understand, the standard will be dead easy. From here, reporting part only questions will come. So while we are conducting audit of summary financial statements, what is our objective? We are trying to check whether summary financial statements are properly summarized as per complete financial statements. Can I call it as consistency? Whatever information which is there in the complete financial statements, whether it is consistently summarized as per applicable or applied criteria. Yes or no? See, when you are checking whether summary financial statements are in line with complete financial statements or not, that is what we are checking. So you will perform all the audit procedures and all for doing that comparison. Now, two outcomes could be possible. What could be the two outcomes possible? Come on. Properly summarized, not properly summarized. Say for example, if you have got evidence that it is not properly summarized, that means the complete financial statements are saying different figures. When they have done the summary, they have included some different figures. Now in this case, the standard says if you came to know that summary financial statements are not properly summarized as per complete financial statements, directly give a adverse opinion. What opinion we shall give? Adverse opinion we shall give. Okay, this is one case where you have did the comparison. It is not consistently summarized only. That means it is not properly summarized. In complete financial statement, some different information is there. In summary financial statement, some different information is there. What is the other case? It is properly summarized. It is properly summarized. But here, when you came to know that summary financial statements and complete financial statements properly summarized, here before you form an opinion, you need to check one more thing. What you need to check is whether the main audit report will be there. No, main audit report will be there. No, on complete financial statements, main audit report will be there, right? So whether that main audit report contains what kind of opinion, we have to see. If the main audit report contains unmodified opinion, or main audit report can contain qualified opinion, or it could contain emphasis of matter or other matter paragraph or material uncertainty paragraph or SA800 other information containing a material misstatement. Or other case could be the main audit report contains a adverse or disclaimer. Adverse or disclaimer. It is properly summarized. If it is not properly summarized, ignore what they are trying to say in the main audit report. Directly give a adverse opinion. If it is properly summarized, then you need to check what is the audit report of the main complete financial statements. If that contains an unmodified opinion, what I will do? Unmodified opinion I will give. Nothing extra I am supposed to give. Unmodified opinion on which financial statements? Summary financial statements. See, but main audit report either contains a qualified opinion, or it contains an emphasis, or it contains an other matter, or it contains an material uncertainty or other information. But they are properly summarized. When it comes to summarization, they have not done any mistake. Then what I should do? Here also the standard impliedly says. They did not say explicitly anywhere. So, but what is the when you read the sentence, you will actually get to know why I am telling impliedly. So here also what you can do is you can give which opinion? Unmodified opinion on what? Summary financial statements. Unmodified you will give on summary financial statements, but they have asked you to explain in your audit report. What you have to explain? That what, because of which matter qualified opinion was given in the main financial statements, or which matter was highlighted in the other matter paragraph, what was highlighted in the other matter paragraph, or why the auditor has concluded there is a material uncertainty, or because of what reasons he gave a negative remark in the other information paragraph. That you have to explain. You can give unmodified opinion, but what you should do? You should explain why the main audit report will has contained it. You have to mention the fact first, that main audit report contains a qualified opinion or other matter, emphasis of matter, material uncertainty or other information paragraph. You have to mention that fact. Also explain the reasons, the matters which are giving rise to the above consequences. That matter also you have to explain. Where in the audit report of summary financial statements. So you have to explain the fact and also reasons. Can I simply write it that way? You are supposed to explain the fact. What fact you have to explain? That it contains a qualified, emphasis, other matter, not all, anyone is there, or multiple things also could be there, whatever it is. So main audit report contains the qualified, emphasis, other matter, or even a material uncertainty or SA720 other information. Explain the fact along with what? Reasons also. Why, which kind of matters are there, that also you have to explain. Understood? Now comes the third part. What is the third part? Summary financial statements are consistent with complete financial statements. But the main audit report contains which opinion? Contains an adverse or disclaimer of opinion. Now what the standard has told you is, don't express any opinion there. Mention that we do not express any opinion on the summary financial statements. what you should say in your opinion, not disclaimer also, don't call it even disclaimer, say that we will not express or we are not permitted to express opinion. We should not call it as a disclaimer. So just you have to say that we are not providing any opinion on the, you should stop yourself from giving any opinion on summary financial statements. So if it contains a disclaimer of opinion, what you should do, what standard has told, don't express opinion. But without expressing the opinion also, what still you should do is you have to explain fact. That main audit report contains a adverse or disclaimer, and the matters which gave rise to that adverse or disclaimer of opinion, that reasons also you have to explain. But still you should say that you will not be expressing any opinion on summary financial statements. That has been strictly prohibited by SA 810. Able to understand? Clear and comfortable, everybody? So why? Because when you told that complete financial statements are completely wrong, then what is the purpose of summarizing? What is the purpose of giving the opinion on summary financial statements when main information itself is completely wrong? Same thing, when main auditor itself is not giving any opinion on the financial statements, what is the purpose of expressing the opinion on the summary financial statements? So that way don't say anything, but mention the fact that main audit report contains a adverse opinion or disclaimer, and also mention the matters that gave rise to the adverse opinion or disclaimer. Understood? So this is what the reporting requirements. So what we will do in the case of summary financial statements, we will verify whether summary financial statements are properly and consistently summarized as per applicable criteria from the complete financial statements. Two outcomes could be possible. They might have been properly summarized or they might not have been properly summarized. If not properly summarized, directly give a adverse opinion. If properly summarized, then you check what is the opinion on the main financial statements. If it is unmodified, give unmodified. No need to give any references, no need to mention any facts. But however, if the main audit report contains either a qualified, emphasis of matter, other matter, material uncertainty, or SA800 misstatements in other information, then you can continue to give unmodified. It was not expressly stated, implied. Why it is implied, I will tell you. So it can give unmodified opinion, but you have to mention the fact that contains a qualified, emphasis, or other matter, and even explain that matter also. And if the main audit report contains adverse or disclaimer, then what we should do? We should not express opinion, but we have to mention the fact that main audit report contains an adverse or disclaimer. Also explain the matters that gave rise to the adverse or disclaimer of opinion. Understood? So this is the only complicated part. Rest of the standard we have to read and finish it. Copy this. Copied. Do it. Those who have not done it, do it. Is it visible, or do you want me to zoom out or something? I'm trying a lot to write it in a neat manner. Okay. Go for the extreme, adverse. Don't express the opinion, but mention the fact. Yes, you have to highlight. Don't express the opinion, but highlight that even emphasis or other matter also. Anni kuda? Huh? Okay. See, if one is there, one only we will explain. If multiple is there, everything we will explain. Right. So let us read the standard now. Just in 15 to 20 minutes we can complete it. Let us have a look at it. Stop talking. Right. So let us see. Engagements to report on summary financial statements. First of all, what are summary financial statements? Summary financial statements reflect historical financial information. Where it is derived from? That is derived from main financial statements. But it contains less detail than the financial statements. Even though it contains less detail, while still providing a structured presentation. Nothing but whatever format thing is there, that format we will follow as it is. But it will contain what? Less detail. So they reflect historical financial information that is derived from financial statements but contain less detail than the financial statements, while still providing a structured representation which is consistent with that provided by financial statements. Of what do they present? What summary financial statements present? They present the results of entities' economic resources or obligation, that is balance sheet, at a point in time, or changes therein for a period of time, P&L. So summary financial statements does also reflect historical financial information that is derived from main financial statements that contains less detail, but at the same time it will provide in a structured presentation which shows entities' economic resources and obligations, that is assets and liabilities, and results thereof, that is profit or loss you have made. Next, different laws and regulations use different terminology to describe such historical financial information. Okay, whatever it is. Now, engagement acceptance. When you should accept the engagement? I have already told you. If you are the person, whoever has conducted the audit of complete financial statements, then only you should accept the audit for summary financial statements. Auditor shall accept an engagement to report on summary financial statements as per this SA only when auditor has been engaged to conduct an audit as per standards on audit of financial statements from which summary is derived. So from wherever complete financial statements this summary has been derived, if you are not the person who has conducted the audit of that, you should not be the person who is conducting audit of summary financial statements. If auditor has also not audited financial statements from which summary financial statements are derived, auditor shall not have a necessary knowledge to discharge his responsibilities in relation to summary financial statements. If you are not the person who has conducted audit of complete financial statements, you will not possess that required knowledge to comment on summary financial statements. That's why the standard has prohibited. Before accepting an engagement to report on summary financial statements, the auditor shall, what he shall do? Like as I have told, in general financial statements, we will see whether applicable financial reporting framework is acceptable. Here what we will do, whether applied criteria is acceptable. So what do you mean by applied criteria? Applied criteria refer to criteria applied by the management in preparation of that summary financial statements. On what basis they have summarized? They have some rules, no? That rules only we call it as applied criteria. Preparation of summary financial statements require management to determine information that needs to be reflected in the summary financial statement so that they are consistent in all material respects with a fair summary of audited financial statements. That means which item should come in summary, which item should not come in summary. That decision has to be taken by whom? Management. While taking that decision, you have to make sure that they are representing a fair summary, not an incomplete summary. It should be a fair summary. That care has to be taken by management. Because summary financial statements by their nature contain aggregated information and limited disclosure, there is an increased risk that they may contain information necessary so as not to be misleading in circumstances. This risk increases when established criteria for preparation of summary financial statements do not exist. So there is inherent risk that in case of summary financial statements, since it does not contain complete information, it might be misleading. And this risk will be very high when there is no established criteria, when no standard, no organization, when nobody has given any criteria. Management, just on the basis of their judgment, they are deciding criteria. The risk is very high. However, if the applied criteria is given by some organization, some institute, little bit less risk it will be there. But if there is no established criteria set, then the management may have to use their own judgment. There the risk is even higher. Factors affecting auditor's determination of acceptability of applied criteria. As I have told, first factor which you have to consider is applied criteria is acceptable or not. How you will decide whether applied criteria is acceptable or not? You will consider some factors. Which factors you will consider? Nature of the entity. It depends on what is the nature of the entity. It depends on what is the purpose of summary financial statements. It depends on what are the intended needs of that summary users. For whoever purpose you are preparing that summary financial statements, what is their purpose? And whether applied criteria will result in a summary of financial statements which are not misleading. And also whatever criteria you have used, that should not mislead the summary financial statements. So you will consider these factors and accordingly you will determine whether applied criteria is acceptable or not. Criteria for preparing summary financial statements may be set out by an authorized or recognized standard setting organization. Sometimes some organization or institute itself will say for example, if I say itself is saying one standard, one criteria, this is how you have to prepare summary financial statements. As per SA800, such criteria is generally considered acceptable. If some standard setting body is saying applied criteria, we generally deem it as acceptable. No need to worry about it. If no established criteria exist, then management may develop criteria based on best industry practices. Next, what if applied criteria is unacceptable? What is applied criteria is unacceptable? Don't do the audit of the summary financial statements. So that's what they say. If the auditor concludes that applied criteria are unacceptable or is unable to obtain agreement of management as discussed above, he shall not accept engagement to report on summary financial statements unless it is required by law or regulation. If there is some mandatory requirement on you to do the audit, say for example, you are an auditor of some company. As per Companies Act, they say that if you are a person who has conducted complete financial statements, compulsorily you have to do the audit of summary financial statements also. But the management is using criteria which is not acceptable. Generally, you should say no. But there is a what? Legal or regulatory requirement. So you have to compulsorily do it. But in case because of some extreme pressure from law or regulation, if you have done such audits, nowhere refer to the standards on audit. Nowhere refer to the SA810. Why? Because SA810 has prohibited us doing for that engagement. We are doing it. Why? Because it is a requirement of law or regulation. So that's why if because of that pressure from law or regulation, if you have done such engagements, nowhere mention it. Nowhere take the reference of SA810. So that's what they say. An engagement conducted as per such law or regulation does not comply with this SA. Accordingly, auditors report on summary financial statements shall not indicate that engagement was conducted in accordance with this SA. Nowhere you have to say in your report that you have conducted the audit as per SA810. Auditor shall include appropriate reference to this fact even in the terms of engagement. Tell the management well in advance, sir, I am doing this audit only because there is a law regulation requirement. Nowhere I will mention in my report that I have done the audit as per SA810. Be clear with the management also. Auditor shall also determine the effect that this may have on the engagement to audit the financial statements from which a summary is derived. Sometimes when you get to know that management is not applying suitable criteria for summary financial statements, that will give you intimation that management might not have integrity there. Management might not be honest. Now, will you reassess your risk of material misstatement in the case of main audit also or not? You don't know that management is having such intention, but you got to know now management is not applying suitable criteria. This might give extra information which might require you to reassess your risk of material misstatement and make changes to your audit strategy, plan and nature, timing and extent of audit procedures. That anyhow will be there. Next. Obtain agreement of management that it acknowledges and understands its responsibility. See, when you are conducting audit of normal company, you ask the management to give some written representation. No? Even when you are conducting audit of summary financial statements, you should ask the management to give some written confirmations regarding what? That they are responsible for preparation of summary financial statements in accordance with applied criteria. And one more most important requirement, the management should make available complete financial statements to the users. It is the responsibility of the management. See, for ease in circulation and all, they are preparing summary financial statements. But if anybody asks for complete financial statements, management should make it available for them. They can't say summary financial statement itself is more for you. We will not give you detailed financial statements. You should not say that. Even ask the management to give written confirmation that they will make available complete financial statements. They will not keep them protected or something. Everybody should be, if at all, on request. If they make it available, they have to make it available. Like what they can do is they will circulate the copies of summary financial statements, main financial statements, they will upload in their website. Or if you come to the AGM, there they will keep. In the olden days, this summary financial statements concept is there. Now it is not there. Why? Because it is digital circulation. They are circulating an annual report to everybody. So whatever it is, you should ask the management to give a written confirmation that to make audited financial statements available to intended users of the summary financial statements without any undue difficulty. Those people who are getting that summary financial statements without any difficulty, they should get the copies of detailed financial statements if they want. It is whose responsibility to make them available? Management. Ask the management to give a written confirmation that they will make them available to the users of summary financial statements, that too without any undue difficulty. Or if law or regulation provides that audited financial statements need not be made available to intended users and establish criteria for preparation of summary financial statements to describe that law or regulation in summary financial statements. sometimes some companies will get relaxation because of law. Law says that if you submit summary financial statements, it will be enough. No need to circulate, no need to make them available complete financial statements. Generally, no law will give such permission. If at all, if your client is permitted by law or regulation not to circulate that detailed financial statements, they have to mention that fact. They have to mention that fact, that management should mention the fact that they have that permission from the law or regulation not to make available the complete financial statements. Unless they don't have such permission, it is mandatory responsibility on the management to make the copies of complete financial statements available to all the users. Auditor's evaluation, whether audited financial statements are made available to intended users or not, that too without undue difficulty, is affected by some factors. As an auditor, how you will come to know? If you ask the management, management will give confirmation. Okay, sir, we have made the complete financial statements available to all the users without undue difficulty. But you have to evaluate. No, you can't blindly believe on them. You have to evaluate whether really management made the complete financial statements available without undue difficulty or not. How you will know that? By considering some factors. Which factors? Number one, summary financial statement should describe clearly from whom or where audited financial statements are available. So in the summary financial statement, somewhere they have to add, for example, if they are on the website, provide the link on the website, or if they need financial statements, please send an email to this email address. So like that, somewhere in the summary financial statements, they should have clearly described from whom they can get the audited financial statements or from where they can get the audited financial statements. And also, audited financial statements are on public record, like on their website or with the stock exchange website. Then also they are made available without any undue difficulty. Or management has established a process by which intended users of summary financial statements can obtain ready access. Or management has one process. They have set one easy process, that too not difficult one. They should have set one easy process, which if a person follows, he will get the access to that complete financial statements. So auditor will evaluate these factors and he will form a judgment whether these complete financial statements are made available to the users of summary financial statements without any undue difficulty. First you will get the confirmation from the management and you will try to cross verify like this also. And to include auditor's report on summary financial statements in any document that contains a summary financial statements and indicates that auditor has reported on them. Which means if management is circulating the summary financial statement somewhere in any document, they are circulating. And in that document, if they are saying that these summary financial statements are audited, then it is the responsibility of the management to compulsorily include the audit report there. Say for example, management is releasing one document, one prospectus they are releasing. In that prospectus, they have included the summary financial statements. And also they mentioned the fact that these summary financial statements are audited. But they are not including that audit report on the summary financial statements. Do you think it is acceptable? So wherever management is circulating the summary financial statements and mentioning that these are audited, compulsorily in that document they have to attach audit report on the summary financial statements, ask the written responsibility, ask the confirmation from the management that they will do it. Don't just communicate with them. What you should do, should even ask the management to make a confirmation, that to give a written confirmation that wherever they are circulating summary financial statements and wherever they are mentioning that they are audited, that must contain that audit report on the summary financial statements. And agree with the management on the form of opinion to be expressed. Even agree with them how you are going to express your opinion on the financial statements. So this is what you need to do when you are, this is what you are supposed to do before accepting the audit. Okay, right. Then what and all are the procedures which you are required to perform? So what procedures you are required to perform in summary financial statements? Let us see. Auditor shall perform following procedures and any other procedures that he may consider necessary as the basis for auditor's opinion on summary financial statements. So what he will do? Number one, evaluate whether summary financial statements adequately disclose their summarized nature and identify audited financial statements. That means in the summary financial statements, management should clearly say that these are summarized. These financial statements are extracted from complete financial statements. Who has to disclose this? Management itself has to disclose. Where they have to disclose? In the summary financial statements, they have to disclose. Check whether they have done it or not. Then, when summary financial statements are not accompanied by audited financial statements, evaluate whether they describe clearly from whom or where audited financial statements are made available, or in case if the law or regulation specifies that audited financial statements need not be made available of summary financial statements and that law has established the criteria. That fact you have to mention. You should also check in case if the summary financial statements are not accompanied by complete financial statements. Only they are sending summary financial statements. We should check whether where they are made available, whether they have been made available without undue difficulty or not. We need to check. Or if they are not making it available with undue difficulty, we need to check, have they got that power from law or regulation, which is asking them they need not circulate it? Check it. Then evaluate whether summary financial statements disclose the applied criteria. What criteria has been followed for summarization, whether it is disclosed in the summary financial statements or not. Compare summary financial statements with the related information in audited financial statements to determine whether summary financial statements agree with or can it be recalculated from the related information. Nothing but that cross verification you have to do. You take the copy of summary financial statements, you do the copy of complete financial statements, keep them side by side and do the comparisons. Next, evaluate whether summary financial statements are prepared in accordance with applied criteria. That is what our main objective. Evaluate in view of purpose of summary financial statements whether summary financial statements contain the information necessary and at an appropriate level of aggregation so as to not be misleading. If I have to summarize it, you need to make sure that summary financial statements are not misleading, that you have to obtain evidence. Evaluate whether audited financial statements are available to intended users without any undue difficulty unless they have got a permission from law or regulation. Repeated points only, they have told it here. Next, form of opinion. Let us see. When auditor has concluded that unmodified opinion on summary financial statements is appropriate, auditor's opinion shall, unless otherwise required by law or regulation, use one of the following phrases. Which phrases? That summary financial statements are consistent in all material respects with audited financial statements in accordance with applied criteria, or alternatively you can also use the phrase summary financial statements are a fair summary of audited financial statements. If it is a normal financial statement, what we will say, financial statements are prepared as per applicable financial reporting framework. They give it true and fair, because there we are verifying that. In summary financial statements audit, what we are verifying, whether they are as per complete financial statements or not. That only you give a positive sentence. So which phrase you have to use? The summary financial statements are consistent in all material respects in accordance with audited financial statements and applied criteria. Or alternatively, what you can use the phrase, the summary financial statements are a fair summary of audited financial statements. Any of these phrases you can use. Next, if law or regulation prescribes other wording, if there is no requirement of law or regulation, generally we use this wording. Sometimes what law and regulation will say is they will ask you to use different kind of wording. So if law or regulation prescribes wording of opinion on summary financial statements in terms that are different from those described above, then what you should do is then auditor shall apply procedures discussed earlier and any further audit procedures to enable to express an opinion. For example, if law or regulation is saying you just should not say whether financial statements are as per complete financial statements or not, should also comment whether the summary financial statements are giving true and fairly. Just by comparing, I can't express that opinion. If I have to express that opinion, I have to do a detailed audit of the summary financial statements. So if the law or regulation is expecting a different wording from you, then in order to get that wording, determine whether you need to perform any extra procedures. And also evaluate whether users of the summary financial statements might misunderstand auditor's opinion. If so, whether adding explanation in the auditor's report on summary financial statements can mitigate possible misunderstanding. If you feel that if you use the wording which has been given in the law and regulation, you are getting a suspicion that people might misunderstand the opinion. If you feel that, determine whether you can add an extra explanation to sort out that misunderstanding. If law or regulation is asking you to use some wording, first we will determine, are we required to perform extra procedures to use that wording? Or in some cases you will feel that if I use the wording which has been given in the law and regulation, people might misunderstand. Then determine by adding an extra explanation, can you sort out that misunderstanding? But if you feel that even after giving extra explanation also, I will not be able to sort out any misunderstanding. Still misunderstanding will be there. If you have that feeling, don't accept the engagement. If you have that feeling, don't accept that engagement. That they say in the next line, if the auditor concludes that additional explanation in the auditor's report on summary financial statements cannot mitigate possible misunderstanding, auditor shall not accept such engagement. But however, here they say unless it is required by law or regulation. If it is compulsion from law, you have to do it. Accordingly, auditor's report on summary financial statements shall not indicate that engagement was conducted in accordance with this essay. As I have told, in case if you are doing it because of compulsion from law or regulation, don't include anywhere in your audit report that you have done the audit as per SA810. Don't include it anywhere. Next, auditor's report on summary financial statements. So how you have to prepare the audit report on summary financial statements? Number one, here also there should be what? Title. A clear title should be there, indicating that it is a report of an independent auditor. Number two, there should be an appropriate addressing. Here what they say here is, in case if you are required to address to a different person than the addressee who is there in complete financial statements, determine whether it is appropriate, determine whether you can do it or not. So they say that if addressee of summary financial statements is not same as that of auditor's report on audited financial statements, the auditor shall evaluate appropriateness of using a different addressee, determine whether it is appropriate or not. If you don't feel it as appropriate, use the addressee whoever is there in the complete financial statements only. Factors that may affect auditor's evaluation of appropriateness of addressee of summary financial statements include terms of engagement, nature of the entity, purpose of the summary financial statements. Which addressee you have to use? You have to keep that in, you have to take the decision keeping in mind these factors. Which factors? Nature of entity, nature of the terms of the engagement, and even purpose of summary financial statements. Accordingly, we will determine who will be the proper addressee. Then identification of summary financial statements on which he is reporting, including title of each statement included in the summary financial statement. So you have to say on which summary financial statement you are reporting, what is included in that summary financial statements, you have to identify. So when auditor is aware that summary financial statements will be included in a document that contains information other than summary financial statements and auditor's report, thereon auditor may consider it if the form of presentation allows identifying page numbers on which the summary financial statements are presented. That means if you feel that management along with that summary financial statements, some other information also they will publish. If you feel that the people whoever wants to read that financial statements, they might not find in that bulk document where summary financial statements are there. What you can do is you can indicate the page numbers. You can find the summary financial statements in so and so page numbers of the document. That if you want to do it, you can add it. Next, identification of audited financial statements. You should also say that this is only summary financial statements. These financial statements are prepared from other complete audited financial statements. You include that statement as well. And then finally, you have to clearly express an opinion. A statement indicating that summary financial statements do not contain all disclosures required by financial reporting framework, which are generally applied in the preparation of audited financial statements, and that reading summary financial statements is not a substitute for reading complete audited financial statements. Just you are making your reader aware that this is only summary. It does not contain all the information. Just because you have read summary information, it doesn't mean you have got all the information. Still, if you want to know the detail, go and read that complete financial statements. If required, then a statement that summary financial statements and audited financial statements do not reflect the effects of events that occurred subsequent to the date of auditor's report. This is very important. Yes, this is related to this L point. Timing of the work and events of subsequent events up to the date of auditor's report. I will try to explain it with a simple example. So say for example, you are doing audit for the financial year 23-24, or let us take the relevant year. Financial year 24-25, you are doing the audit. You are doing the audit of complete financial statements also. You are doing the audit of summary financial statements also. So if you are doing audit of complete financial statements, you are required to comply with SA800 or not. SA800 subsequent event. How does that define the subsequent events? The events which are occurring between the date of financial statements and the date of auditor's report. Say for example, main audit report was given on 15th of May. So whatever events which have taken place from 31st of March till 15th of May, that only will be subsequent events. Regarding that only you will consider in your audit. Yes or no? Now summary financial statements audit is also happening. After signing the audit report on complete financial statements, after that only you will sign the summary financial statements. Say for example, you are signing the summary financial statements audit report on 25th of April. Now, for the purpose of conducting audit of summary financial statements also, you have to comply with SA800 subsequent events. But here what are subsequent events? Generally meaning of subsequent events is what? From the date of financial statements till the date of auditor's report. For complete audit, subsequent events are those events which are happening till 15th of May. For summary financial statements, till what date it will be subsequent events? Till 15th of May only. Till 15th of May only. We are nowhere required to worry about these events. Why? Because as I have told, when we are verifying summary financial statements, we are only checking whether they are properly summarized or not. So only matters whatever have taken place till the date of your audit report on the main financial statements, that only will be your subsequent events. After the date of audit report on the main financial statements, whatever events have taken place, that you need not get worried even in the audit of complete financial statements, even in the audit of summary financial statements. Understood? So that is what this paragraph says. If you read it, when auditor reports on summary financial statements after the completion of audit of financial statements, the auditor is not required to obtain additional audit evidence on audited financial statements. Only you have to check the summary. And also the report of effects of events that occurred subsequent to the date of auditor's report on audited financial statements. You need not worry about whatever transactions which have taken place after the date of auditor's report on audited financial statements, since the summary financial statements are derived from complete financial statements. So that's why no need to worry about any events which have taken place after the date of auditor's report of main financial statements, complete financial statements. Clear? Shall we proceed? Both approval of financial statement should always be before the date of auditor's report only. It can't be later. Yes. No, that is financial. That is as per the accounting standards. As per the auditing standards, subsequent events are those events which are occurring between the date of financial statements and the date of auditor's report only. This we have explained even in SA860 also. Please revisit the discussion. You are mixing AS and SA. Both are different. At both places we have different definitions. Next. Right. Yeah. So let us come back here. So in your audit report, you have to also include a statement. If required, add a statement that summary financial statements and audited financial statements do not reflect the effects of events that occurred subsequent to the date of auditor's report on main financial statements, not on summary financial statements. Next. Reference to auditor's report on audited financial statements. What is the date of that report and the fact that an unmodified opinion is expressed on the audited financial statements. Even you have to include in your audit report on the summary financial statements that audit report, when audit report on main financial statements was given, what kind of opinion is there. If unmodified opinion is there, we will say unmodified opinion. What if there is a modified opinion? That anyhow we will see it later. I have already told you what you should do. In the paragraph, in the chat we have told if there is modified opinion, what you should do, that they will tell it separately. If it is unmodified opinion, simply we will say main audit report contains a unmodified opinion. If there is a modified opinion, what you should do, that we will say it in the next part of the standard. That anyhow we have discussed in the chat. Next. A description of management responsibility for summary financial statements. Explain that management is responsible. You have to add one line that summary financial statements are the responsibility of management. A statement that auditor is only responsible for expressing an opinion based on audit procedures conducted in accordance with this standard on whether summary financial statements are consistent with audited financial statements. Then finally you have to sign auditor signature along with firm's registration number wherever applicable and your membership number, and even UDIN also you have to mention. Then date of auditor's report. Date of auditor's report, here what they say here is auditor's report on summary financial statements shall not be earlier than. That means it should be later than which dates? It should not be earlier than the date on which, it should not be earlier than opinion. What is this? This only the date on which auditor has obtained sufficient and appropriate audit evidence on which to base his opinion, including evidence that summary financial statements have been prepared and those with the recognized authority have asserted. That means your date of auditor's report should always be later. It should not be earlier than date of obtaining evidence. It should not be earlier than approval of the financial statements. That is what the last part. They have asserted that they have taken the responsibility. Management should have taken the responsibility. So your date of auditor's report on the summary financial statements should not be earlier than the date of obtaining evidence and the date of management acknowledgement. That is approval of the financial statements. And it should not be earlier than date of auditor's report on audited financial statements. That means you can't date the audit report on summary financial statements before the audit report on complete financial statements. So you should always date it either on the same day also if you do it fine, but it can't be earlier. Next. Along with that, you have to also mention the place of signature. The place wherever you are signing, that also has to be mentioned. Now, modifications to the opinion, emphasis of matter or other matter paragraph in the auditor's report on the audited financial statements. What you are supposed to do? This we have already seen, right? Let us see what they are saying. Reference to auditor's report on audited financial statements. When the auditor's report on the audited financial statements contains a qualified opinion, emphasis of matter or other matter, material uncertainty relating to going concern, or even it contains a key audit matter. Here even they have added key audit matter. In the chart I did not do it, so just add that line also, key audit matter, even if there is a key audit matter, right? Or key audit matter, or a statement that describes an uncorrected material misstatement in other information as per SA800. And auditor is satisfied that summary financial statements are consistent in all material respects with or a fair summary of audited financial statements in accordance with applied criteria. Auditor's report on summary financial statements shall, in addition to the elements discussed above what they have told, you have to tell your opinion. If they are consistent, what opinion you will give? Unmodified opinion you will give. But in addition to that, what you should do? You have to mention that facts. State that auditor's report on audited financial statements contain a qualified opinion, emphasis of matter, other matter, material uncertainty, key audit matter, or uncorrected misstatements in other information. State that this information is there in the main audit report. So fact you have to mention, but fact alone will not be enough. What also you should do? Describe the basis for qualified opinion. Why they have given the qualified opinion? Describe it. Or which matter has been highlighted in the emphasis or other matter, or in material uncertainty related to going concern. Describe it. Or what is that uncorrected material misstatement in the other information? Describe it. So if you see here, nowhere they have told you to give a modified opinion. What they have told? In addition to above, include this. Which means what? They are impliedly giving you a permission to give unmodified opinion. Able to understand? That's why I told, they did not say explicitly, it is a implied conveyance. Next. When the auditor's report on audited financial statements contain what? Adverse opinion or disclaimer of opinion, then the auditor's report on the summary financial statements shall additionally state that auditor's report on the audited financial statements contain a adverse or disclaimer, determine the basis for that adverse or disclaimer also, and state that, this is important, and state that as a result of adverse or disclaimer of opinion, it is not appropriate to express an opinion on the summary of financial statements. Just to mention that it is not appropriate for us to express an opinion. Next, modified opinion on the summary financial statements. This when we will do? If the summary financial statements are not consistent in all material respects with, or they are not a fair summary of audited financial statements in accordance with applied criteria, and the management does not agree to make necessary changes, then the auditor shall directly express a adverse opinion. This entire discussion, this is what I have summarized in the form of the chart. Clear? Right. Restriction on distribution or use or alerting the readers to the basis of accounting. Same, this paragraphs you have already seen in 800. If you feel that this is only for specified users, this should not be distributed to everybody, that you have to put the restriction, or even you can add a paragraph alerting the readers that this is only for specific purposes, not for everybody. Right. When distribution or use of auditor's report on audited financial statements is restricted, our auditor's report on audited financial statements alerts readers that audited financial statements are prepared in accordance with special purpose framework, auditor shall include a similar restriction or alert even in the case of summary financial statements. Like the way we have alerted the readers, or we have put a restriction in the case of SA800, same restriction, even if it becomes applicable, do it for summary financial statements also. Then comparatives, some extra information is there, we'll try to complete this. Comparatives means what? Generally in the financial statements, if you take along with the current year data, last year data also will be there, no? So that generally will be there for the main financial statements. Now what they say here is, in the main audited financial statements, there is comparative information. But in the summary financial statements, they are not including comparative information. Then what we should do? In the main financial statements, they have presented 2 years data. In the summary financial statements, only they have given current data. Comparative last year's data, they have not given. Then what I should do? Let us see what you should do. If audited financial statements contain comparatives, but summary financial statements do not, auditor shall determine whether such omission is reasonable. Is there a valid reason for that? The auditor shall determine the effects of unreasonable omission on auditor's report. If you feel that without any valid reason that has been omitted, and it is disturbing the picture shown by summary financial statements, consider the effect of opinion. So that means here what we can do? Modified opinions we can give. We can say if you feel that omission is very significant and there is also no valid reason for that. So if you want to take action on your opinion, you can take it on the summary financial statements. Basically, you can give a modified opinion. Next, summary financial statements contains comparatives. That means last year's information is presented. So if the summary financial statements contain comparatives that were reported by another auditor, auditor's report on summary financial statements shall contain matters as per SA800. SA800 is still pending for discussion. I will explain it. If last year financial statements are included, if they are audited by another auditor, in some cases you have to include some information in your audit report. What is that information? We will see it in SA810. That SA810 requirements also you have to comply. Simply remember that if comparative information is also presented in the summary financial statements, SA810 also will become applicable. What is SA810? We will see it later. Next. Unaudited supplementary information presented with summary financial statements. So what is that? Same other information, exactly. The same paragraph you will find it in the audit report chapter also. If your financial information is getting presented with unaudited supplementary information, you should ask the management to differentiate it. If the management does not bifurcate it, you will take the action in your audit report. How you will take the action in your audit report? Not modified opinion. How you will take the action? In the other information paragraph, you can say that information is not covered by my opinion. So the same thing, SA820, more or less SA820 reference only here. So the auditor shall evaluate whether any unaudited supplementary information is presented along with summary financial statements. If yes, it is properly differentiated, bifurcated. If auditor concludes that entity's presentation of unaudited supplementary information is not clearly differentiated, they are mixing, they are not bifurcating from summary financial statements, auditor shall ask the management to change the presentation. If management refuses to do so, the auditor shall explain in auditor's report on summary of financial statements that such information is not covered by that report. With how you will take the action? Not by modified opinion, by way of other information. Other information paragraph we will use now as per SA820. There itself we will say our opinion is restricted only to summary financial statements, not on other information which is supplemented. Next. Other information in documents containing summary financial statements. Once again, this is also 720 only. Both are trying to say the same thing. We will try to find if there is any material inconsistency. If there is material inconsistency, comply with the requirements of SA720. See here, if you want, the same thing will be there. The auditor shall read other information included in a document which contains summary financial statements. And if auditor identifies a material inconsistency, he shall discuss with the management. If auditor determines that information need to be revised or management refuses to revise, take appropriate action. Once again, how you will take appropriate action? Not by modifying the opinion once again by way of other information. In that other information, you will give a negative remark that there is an uncorrected misstatement in the other information. So just write it here, 720 there. Then auditors association, here they try to say a few points. Let us see what are they. If auditor becomes aware that entity plans to state that auditor has reported on summary financial statements in a document containing summary financial statements but does not plan to include related auditor's report, the auditor shall request the management to include the auditor's report. This I have already clarified. If the management is somewhere publishing the summary financial statements, there they are saying that it is audited, then they must include audit report. If they have not included, ask the management, sir, you are issuing the summary financial statements, you are saying that it is audited also, please include my audit report, request it. If management does not do so, the auditor shall determine and carry out other appropriate action designed to prevent management from inappropriately associating. If the management is not listening, without including your audit report only, they are circulating, you can take appropriate action. What action you can take? Once again, as I have told, public announcement, reporting to regulatory authorities, or reporting to, if it is a listed company, reporting it to SEBI, some appropriate action you can take it here. Next, the auditor may be engaged to report on financial statements of an entity while they are not engaging you to report on summary financial statements. The company you are conducting audit of complete financial statements. They have prepared summary financial statements also, but they are asking you no need for audit. They have appointed you as a complete financial statements auditor. They have prepared summary financial statements also, but they are saying no need to audit summary financial statements. They ask you to audit only complete financial statements. If in this case, auditor becomes aware that entity plans to make a statement in a document that refers to the auditor and fact that summary financial statements are derived from financial statements by auditor, the auditor shall be satisfied. They are saying summary financial statements is not required, but somewhere they are publishing that summary financial statements. Then you should go and ask the management that the reference to auditor is made only in the context of auditor's report. You should ask the management to clearly state in that document, sir, since you are using my audit report, clearly say that my audit report is only on complete financial statements. My audit report has nothing to do with summary financial statements. Ask the management to write it somewhere in that document. If they are not ready to do it, offer alternative solution. What is that alternative solution? Pay me the fees for separate financials, pay me the fee for summary financial statements. I will do it, then only you use the name. Two options you have to give them. Either remove my name. If you want my name to be there, what you should do? Pay me the fee. I will do the audit of the summary financial statements also, then include my name and that report. So that's what they say here. In case if you are not asked to do the audit of summary financial statements, and if the auditor becomes aware that entity plans to make a statement in a document that refers to auditor, and the fact that summary financial statements are derived from audited financial statements, then the auditor should be satisfied that reference to auditor is made in the context of auditor's report only, and even ask this, and the statement does not give impression that auditor has reported on summary financial statements. So you should make sure that no statement is giving an impression that you have also audited summary financial statements if you have not done it. Or alternatively, if A and B are not met, the auditor shall request the management to change the statement to meet them. Or if they are not ready to change it, as I have told, or not to refer to auditor. If they are not ready to do it, what I will say? Alternatively, entity may engage the auditor to report on the summary financial statements and then do whatever you wanted to say. Next. If management does not change statement, delete references to the auditor, or include an auditor's report on summary financial statements in document containing summary financial statements, auditor shall advise management that auditor disagrees with such references and he shall determine and carry out other appropriate actions. Once again, what could be other appropriate action? Communicating with the regulatory authorities, giving a public announcement, whatever action you feel like appropriate, take that action. Understood? So much of information we have discussed, but the most important part from this entire standard is that reporting, and that subsequent points, whatever I have told, that is having a chance of getting tested as a MCQ. That subsequent events part is also very important. And yeah, that's it. So shall we do the questions now, or will you give a look at the standard ones? Questions? Yes, few questions we have here. Why to take it tomorrow? Why tomorrow? 5 or 6 questions are there. Simple questions. Everything I have explained. I know it. Just reading the question and making the references. That's all. Hey, you have sat for this much time. Can't you sit for 5 more minutes? You have to sit. Let us see it. CA Madhur is auditor of company and has issued audit report dated on 15th June of a particular year. The audit report on summary financial statements derived from such audited financial statements is dated 15th July of that particular year. Discuss whether there exists any reporting responsibility for auditor in such a situation in respect of audit report on summary financial statements. He will report on summary financial statements, no problem, but as I have told, that events, whatever have taken place after the date of main audit report, he will not have any responsibility to take care of it. The audit report on summary financial statements derived from audit financial statements is dated 15th of July of that particular year. However, the audit report on audited financial statements is dated 15th of June. Before only, no problem, no. In the above situation, the auditor's report on summary financial statements should state that summary financial statements and the audited financial statements do not reflect the effects of events that occurred subsequent to the date of auditor's report on audited financial statements, not summary financial statements. Next. Consider that audit report on financial statements issued by CA Madhur for above said company contains a qualified opinion. Can he issue an unmodified opinion on summary financial statements derived from audited financial statements? Yes, he can issue unmodified opinion. But what he should do? Explain, state the fact that it contains a qualified opinion and also describe the effect of the matter which has given effect to that qualified opinion. Next. CAY is auditor of company. He has expressed an adverse opinion on audited financial statements. What points he has to keep in mind while expressing an opinion on summary financial statements? What you will do? Will you express an opinion? No. He will say it is inappropriate to express an opinion, but he has to mention the fact that main audit report contains a adverse opinion and also describe the matter which has given to that effect of adverse opinion. That you have to describe also. Next. CAY is the auditor of STEC Limited, a company that recently faced material misstatements in its financial statements, leading to an adverse opinion on the audited financial statements for the financial year 23-24. Now the management of the company has prepared summary financial statements derived from the audited financial statements and requested CAY to express his opinion on these summaries. Will you express your opinion? No. What additional points should CAY consider when expressing an opinion? As I have told, reporting is very important. On reporting only you will find multiple questions there. Next. Mr. BK has been engaged by XYZ Limited to report on summary financial statements derived from the financial statements audited by him in accordance with SA. Mr. BK wants to determine whether the applied criteria is acceptable before accepting such engagement. Guide him the factors affecting auditor's determination of acceptability of applied criteria. Straightforward question, no? So whether that is nature of the entity, like that 4 or 5 points we have seen, right? So that you are supposed to write. Next. When auditors report on audited financial statements contain a qualified opinion, blah blah blah, same here, it contains qualified opinion, but you are satisfied that fair summary is there. You can give unmodified opinion, but you have to describe it. Next. That's all. See, that's all. Not even 5 minutes also. You unnecessarily create noise for this. Okay. So that's all for now. We'll see you in the next class. Bye.